the economy will continue to not boom, but be really quite expansive, quite strong.
It's all about that transition to higher quality growth.
I think we've got a reflationary backdrop still in place. I think it's reflation for longer.
We've already seen signs inflation is tapering down.
For the last year, it's always been employment, employment, employment.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene, a simulcast, Bloomberg Radio and Bloomberg Television. And we say good Monday morning to you. Lisa Abramowicz is here. She is not virtual. No. Always virtual is Kaylee Lines in for John Ferro. Lisa, we're not going to Jackson Hole.
We're not. We can break the news here. If you were wondering, we are not going. They actually canceled it. So if we were going, we'd have a lot of questions being raised right now. This really is, though, a symbol of where we are in the economic recovery,
agree.
Tom. And I think the fact that they shifted this to a virtual meeting rather than an in-person one shows how we are retracing our steps when it comes to the pandemic, and the ramifications for the economy are significant.
We're going to get to the markets with a very nice lift this morning, a real adjustment in the real yield. But Lisa, all of the writing over the weekend led by Mohamed El-Erian in the Financial Times this morning. El-Erian demands that Powell regain the policy initiative.
Yeah, the idea here is going forward, how exactly are they going to face off with inflation and employment at a time of such incredible uncertainty when you have a Delta variant that is slowing growth now, but you have an economic recovery that does have steam on the other side of it? And honestly, if the balance of risks are looked at right now, Tom, is it more on an inflationary shift to the upside, or is it more on a dragged out recovery? And I do not know the answer to that, Tom.
Now, the inflationary lift to the upside, Kaylee Lines, you see it in yield. I mean, we're going to do a data check here, but you see yield really nicely get out to a higher yield. It seems like a more attractive inflationary morning.
Well, 127 on the 10-year, at least on the nominal yield, Tom. But to your point about the real yield, we're above negative 100 basis points, only negative 99 basis points, which feels in some ways remarkable. But to your point about inflation and the labor market, I really wonder if this Friday is the Friday we have to pay attention to when Fed Chairman Powell speaks, or if it's next Friday, the August payrolls report on September 3rd, and if that really may be a defining moment as to whether or not the Fed can move or not, Tom.
Let's get to the data now and do a morning brief. We've got an important equity guest to get you started strong on a Monday. Futures up 16, Dow futures up 156. The VIX isn't where it's supposed to be. The VIX is supposed to be in like 16 or 17 and a half. It's 18.66. As Kaylee Lines mentions, a 128 10-year, 30-year bond back out to 1.89, nowhere near 2%. But we'll take it. That real yield in under a negative 100 basis points. Oil even lifts this morning. Brent back to $67 a barrel. And dollar still planted, a stronger dollar above 93 on DXY. We watch euro. 116 is a stronger euro to 117.27. I was in the rain all weekend. I blessed the rains in Central Park, so I need a briefing. Here's Lisa.
Oh, boy. Here we go. We'll have him singing. I will guess later in the show. It's a risk-on day today, and a lot of people are looking at the fact that we saw this huge dip of 0.6 percentage point in the S&P last week and thought, it's time to buy the dip, which is where we are right now. Interesting, though, to see the high-frequency data that is coming out with an increasing deterioration due to the Delta variant. 9:40 a.m., perhaps we'll get a sense of this. U.S. market manufacturing and services PMI data following some European data that we got overnight. UK in particular seeing the biggest fall. It's the lowest level in 6 months for some of the PMI data over there. How much does this reflect a pause versus a sustained slowdown in the economic recovery? 10 a.m. we also get U.S. July home sales, existing home sales data. How much strength do we see continuing? Yes, we're expecting a deceleration, but we're at very high levels. Let's be very clear. The housing market is still very hot in the United States and, frankly, around the world. And today, this is interesting. In Washington, D.C., Congress members are on vacation, but they're not anymore as of today. The House of Representatives is being called back. Nancy Pelosi wants to hold a vote on the agenda of President Biden with the resolution passed in the Senate last week on the budget, hopefully getting passed at least if she can wrangle Democratic consensus. And this is their hope. However, a lot of questions are emerging. Tom, the margins are very narrow here. We don't have a lot of room for Democratic disagreement at a time when a lot of people are baking in the expectation for Biden to get through this $4.1 trillion agenda that still has a lot of asterisks and uncertainty.
Yeah, Mr. Hoyer suggested no voting before 6:30 p.m., and we've got to get to that. And the news flow out of Afghanistan, folks, to be honest, is just flat out challenging. Any number of reports that the Taliban have simply said they will not extend out past August 31. I'm a little unsure of that language, but a number of reports there from Reuters, the National Post of Canada as well. And the cacophony of Afghanistan leads to how does that get to Pelosi? And for that matter, what does it mean for the markets? Bill Dudley, scheduled to join us, the former president of the New York Fed here in a bit. Right now, Lori Calvasina with us, RBC Capital Markets. Lori, it is a resilient market. Is it a market that can break out to new highs?
So thanks for having me, Tom. Thanks for having me, Lisa. Look, we're still in the camp that thinks we'll get a decent-sized pullback before the end of the year. So we've got a target of 43.25 on the S&P. And look, I think what was interesting in the price action last week, it felt like we had a bit of a growth skirmish to start the week. We saw the index falter, and we saw defensive sectors leading the charge. When that ends up happening, the market really can't sustain this move to the upside. Now, what we saw towards the end of the week is that those jitters did calm down a little bit. Tech started working. We started to see just some stability in the index return. But when you have fear seep in, markets really can't climb. When you have sort of that nervousness and that shift to high quality, markets can climb that wall of worry. But it's a very delicate balance. And frankly, it didn't work for most of last week.
Well, but honestly, how big is this wall of worry, Lori, if we have the Fed that is backing the market, if we have the potential, a greater potential, frankly, for federal fiscal stimulus if the slowdown does persist? I mean, doesn't policy support sort of completely cancel out slowdowns that might otherwise come up?
I think that's one of the reasons why over the last, sort of few months, we've seen a lot of nervousness in the market just sort of expressed through, well, I'm uncertain I'm going to go to high quality. I'm not going to go to defensives. I think that has helped bolster that case for moving to the secular growers. But we do know that we're starting to wind down some of these programs, or we can sort of see the light at the end of the tunnel. So I think the power of that to sort of bolster markets going forward at least has a diminished impact, even if you're not pulling the rug out from the market all at once.
But we have seen also underperformance of small caps. We have seen a rotation out of cyclicals. Can we glean any confidence in equity valuations based on this discretion that we're seeing on the part of fund managers?
Look, I think that, there are a couple different questions, I think, baked in there. I think it's a great question. But I think in terms of small cap, I think that we've seen so many worries manifest in the dramatic underperformance of small caps since March. I think at first it was the impact of inflation on profit margins, which really didn't end up coming through. But I think worries were expressed there. Investors have fretted about the negative feedback that you'll get on demand from inflation. That's also been expressed in small cap. And now I think you mentioned the softening in the high frequency indicators. I think some of the short-term, sort of economic damage from the Delta variant, I think that's manifest in small cap. But small caps have, at the end of the day, not completely collapsed. We haven't seen them go into bear market territory. So there's, a little bit of that resilience that we will be able to turn the corner still showing up in that data set.
Is it time to get more defensive within your equity allocation, though, Lori?
We essentially did that, Kaylee. We actually have been dialing down the cyclicality. I don't make sector recommendation changes all that often, but a few weeks ago, we actually did pull down materials, which was our least favorite of the cyclicals. We're sticking with financials and energy, but we did actually boost the tech sector, the proper tech sector. It doesn't include the internet stuff, but we did pull that up to an overweight from a market weight. And we basically said going forward, if we're thinking about the next 12 months or so, we want to be very balanced between sort of the defensiveness of secular growth and the cyclical-oriented sectors. So we did actually make that sort of shift on the dial.
So you're looking out 12 months. I'm looking out the next, 3 months and change and wondering if in 2021 we will see a 5% drawdown at any point in this equity market. What would be the catalyst for that?
So I think we got a little bit of a hint of it last week with concerns on the growth outlook. And look, I'm not saying that anybody's anticipating we're going to have a recession or anything like that. But I do think there had been some complacency on the economic data that investors had, or some deterioration on the economic data. And there have been, frankly, some complacency about the impact of this Delta variant from market participants. So I think that was a little bit of a wake-up call, a little bit of period of digestion we had to have. But let's just zoom out a little bit. What was that, sort of reaction to the Delta variant all about? was an unanticipated bit of bad news that hit the market and really challenged investors' assumptions of what they thought going forward. So I think the answer in there, Kaylee, it's probably something that the market is not able to anticipate. With valuations where they are, with sentiment as stretched as it is, this is not a market that has a lot of room to absorb bad news when we do get it.
Lori Calvasina, thank you so much. Greatly appreciate it. We do this with futures up 14. The percentage changes when I last looked pretty even all in all. Small caps and the Russell looks up 0.9% to Ms. Calvasina's comments there. Lisa, your thoughts on the equity market after your weekend reading?
Honestly, the fact that we've already seen a sell-off in certain sectors, we've seen a rotation out of cyclicals, I think that's important. I think that the idea that dividend payments have been accelerating and upgraded, frankly, they're on pace to be the second most ever this year. Tom, there's a lot of fundamental support to this. And then you hear corporate executives not as worried as the health officials about the Delta variant and not seeing the slowdown to the same degree. You pair that with the slowdown in economic data, you get a muddle. However, it does not seem like we're heading into any sort of crash or anything, substantial when it comes to what the sell-off could be.
Yeah, Kaylee, in the back of the week, it seemed like almost a two-part equity market. There is an equity market that's really pulled back, and then there's a group of stocks, we know the names, that haven't.
Yeah, a bifurcation, some may call it, Tom. But broadly, I'm looking at an equity market. We're north of 4,400 on the S&P 500, and the average year-end target, when you look at strategists' targets on the street, is 4,335. So we have already been, and we have been for some time, above where strategists see us ending the year. The question is, do those strategists need to play catch-up, or is this market going to come down, Tom?
Well, it's going to be interesting to see with the economic data, and of course, what we see Friday. We will have coverage Friday for a different Jackson Hole. We thought we would be on the edge of that beautiful sort of swamp and field over to the Grand Tetons. That's not going to happen, but there'll be plenty of interest at Jackson Hole. Michael McKee with important conversations, and of course, Chairman Powell's speech. We'll have complete coverage of that Friday as well. Coming up, David Leibowitz, this with the futures up 14, the VIX 18.70. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. Bloomberg's learned that British Prime Minister Boris Johnson will push President Biden to delay the departure of U.S. troops from Afghanistan. That's to allow for more and safer evacuations. The president has already said he might have to extend the deadline for U.S. troops leaving past the original August 31st date. The U.S. and its partners have now flown out more than 30,000 people from Kabul since August the 14th. In Tennessee, at least 22 people were killed and dozens are still missing after record rain sent floodwaters surging through rural areas. Up to 17 inches of rain fell during a 24-hour period about 60 miles west of Nashville. Rescue crews are searching destroyed homes for survivors. Tropical Storm Henry soaked the U.S. Northeast with rain after coming ashore in Rhode Island. The storm left a trail of power outages from New Jersey to Massachusetts. About 1,000 flights were canceled, and Amtrak had to cancel trains between New York and Boston. Bitcoin has gone over $50,000 for the first time since mid-May. The world's largest digital coin is now up 72% since a July low. The total crypto market has seen its value rise almost $1 trillion in the last month. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
The evacuation of thousands of people from Kabul is going to be hard and painful, no matter when it started, when we began. It would have been true if we had started a month ago or a month from now. There is no way to evacuate this many people without pain and loss of heartbreaking images you see on television.
The President of the United States. We welcome all of you. Good morning. Bloomberg Surveillance, Lisa Abramowicz and Tom Keene. John Farrow for a well-deserved rest. Kaylee Lyons in with us this morning. It has been an extraordinary weekend for America's foreign policy. Anne-Marie Horton joins us now, our Bloomberg Washington correspondent. Anne-Marie, can you put scope and scale on what's going on at the Kabul airport with all of your reporting over the weekend? I saw you working nonstop this weekend. Are we halfway through that ordeal, a third of the way? Where are we on this Monday afternoon in Kabul?
It's incredibly hard to judge, Tom. The situation at the airport is very fluid and precarious, and we heard from the president yesterday that they're actually extending operations to make sure they can get Americans securely to the airport. But because of security reasons, they will not detail those tactical changes. What we do know is more than 30,000 people have been evacuated since August 14th. What is going to be a more hazardous and potentially what could be a risky operation is the extension of that deadline past August 31st, with which the president acknowledged yesterday that could be a potential, but already we're seeing reports that the Taliban will not have that extension.
Part of this is a renewed geography of Afghanistan. As you know, Anne-Marie, the Northern Alliance with a different flag and some real cohesiveness and organization was evident 20 years ago. And there's a little bit of a revolt north of Kabul this morning. How substantial is the follow-on to the Northern Alliance?
Well, yeah, 90 miles north of Kabul, you're seeing some of that resistance. I think the United States is going to have to make a tactical assessment on whether or not they're going to decide to recognize the Taliban and make sure that people in Afghanistan are able to get humanitarian aid and the likes and deal with the Taliban, or they're going to want to continue to support groups like the Northern Alliance to undermine what the Taliban is doing. But the Northern Alliance has been around for decades, Tom, as you know, and I continue to believe that they will continue to want to put up a force against the Taliban. But again, we should note that it's not just the Northern Alliance. This is a country with a lot of fractious and different groups, and it has been that way for centuries.
Yeah, I looked, Lisa, at this, and I want to make clear here that I'm not sure what is north of Kabul is the Northern Alliance, but it just alludes to that from decades ago.
And beyond is the international ramifications of the U.S. policy in Afghanistan, which were very much in the front and center with Vice President Kamala Harris over in Singapore over the weekend. Anne-Marie, what did we learn in terms of some of the questions and some of the international response to what's been going on with Afghanistan?
Well, she wanted to answer questions about climate, about public health, about what they're doing in terms of cybersecurity. But of course, she was sent a litany of questions at the press briefing about what does this mean for the U.S. and their security presence in Asia and what it means for their allies. And they remain firm that they will, of course, be there for their allies. But you can just see that the vice president's trip to Asia is completely being overshadowed about what is happening in Afghanistan.
And there's also an issue with respect to the domestic agenda. We've been talking about this for weeks since the unraveling, frankly, of the Afghanistani leadership. We're looking at the House coming back to Washington, D.C., ending their break earlier. I'm sure they'll come back grumpy. What are the biggest challenges for House Speaker Nancy Pelosi as she tries to get this through?
Yeah, not just the lawmakers. I think some of the journalists are grumpy as well. So this evening we'll get the first votes, and it's three parts. There's going to be voting rights measures. There's the budget reconciliation, and then there's of course the bipartisan infrastructure. Tonight is just procedural votes. Really, it comes down to tomorrow. Could Speaker Pelosi get all of her caucus together to get through her plan tomorrow? And this is where it's going to get interesting for her, because you do have 9 moderate Democrats yesterday evening writing in the Washington Post, led by Senator Josh Gottheimer, saying that we want infrastructure bill now, talking about the fact that there's a famous saying that time kills all deals and we need to move now on bipartisan infrastructure. What Speaker Pelosi has brought forward is just a procedural vote on that bipartisan infrastructure, but those moderates want that to turn into legislation. So tomorrow is really going to be an important day for those votes, and potentially it can extend out into the week.
Between the moderates and the progressives, who is more likely to cave?
It's a very good question. Remains to be seen. I will say there's about 9 of those centrist, moderate Democrats. There's nearly 100 of the progressive caucus. So I think you have to look at who has the numbers.
And then what happens after this week and then until the House and the Senate come back from their recesses for real in September? Would we expect anything else to happen in those weeks in between, or is it this week and then we're just all going to be sitting silently for a while?
I guess anything could happen. I mean, they were supposed to be on vacation, and they're already coming out for a special session with Afghanistan front and center. There's also going to be hearings and briefings between House Intelligence Committees, between the Gang of Eight on both sides, Democrats and Republicans, about what exactly went wrong in terms of withdrawal from Kabul. So right now we know it's going to last this week, but if they don't get the votes, it could potentially bleed into next week as well.
Anne-Marie Horton, thank you so much. An eventful week, to say the least. Anne-Marie Horton in Washington. Lisa, I want you to tell me about supply here. I mean, you know I don't care about the auctions. We make a joke about it. But is it, you know, in August here, is high-yield IG a sleeper, or is there a lot of issuance going on?
I feel like I'm falling asleep as we talk. No, honestly, like, I'll be honest. This is a sleepy week. As much as it is August, I think that there was an extra pall cast over issuance, cast over, frankly, all activity as we look ahead to Jackson Hole that is virtual. The idea here that everything is taking on diminished importance at a time of such uncertainty. You are seeing a slowdown in sales, but a lot of people are expecting a record pace of issuance in the corporate debt world after Labor Day. And there's plenty of money actually set aside for that, with some people actually being a little bit less aggressive with their purchases now ahead of that. But Tom, do you really think it's that exciting of a week? I mean, do you think that this is actually going to be an active week for trading? No, I think, well, that will be based on the news. What I will say is it's been an interesting August, to say the least. Why is this week going to be any different than what we've seen so far? Let's do the data check right now. We come into the office this morning. Guess what? Up. Futures up 14, Dow futures up 142. And the VIX, to me, not where it should be. It should be a low 18 to 17 handle. The VIX showing a little bit of tension, 18.72. Maybe that'll change into the trading day. 10-year yield, 1.28%. Lisa. Why did we call Hurricane Henry Henri?
It's French.
Right, I know, but why? I'm serious. Like, why is this hurricane different from all other hurricanes when it comes to the Frenchness? Just to go
Kaylee, this is surveillance philosophy this morning.
Doesn't it? There's a cycle of names that they have to go through. Henry must have been used recently, so then they had to change up the prono.
Did you guys go and hang out at Central Park?
Dance in the rain? I did not.
No, we did. The rain was really heavy, though. I must admit, it's worse than Sandy. Right now, avoiding the rain in Singapore, the Vice President of the United States on the USS Tulsa. It is a gunboat from long ago and far away, and now, of course, a much more modern ship as well. Vice President Harris in Singapore. Good morning. Good morning, everyone. Bloomberg Surveillance, Lisa Abramowicz and Tom Keene. John Ferro, off. Kaylee lines in today and I believe tomorrow as well. Futures up 15, Dow futures up 147. A nice lift to the market. A real correlated change here with a higher yield, a return to higher yields, I should say, and some dollar, I'm going to call it stability this morning. This is a joy. Let's get right to it with Michael Darda with MKM Partners, our chief economist and market strategy. Michael, you go right at the media gloom crew. You just tear them to shreds in your note, and you say, look, there's a lot of labor data which shows a more employed America. There is high-frequency data that shows a pretty good, maybe not mint set of data as well. What's the gloom crew get wrong?
Well, Tom, I think the gloom crew is focused on the variant, and that news has been bad, and there are risks. All of that said, if we do look at the highest frequency economic data that should tell us if the economy is rolling over, that still looks good for the most part. So this past week, we saw jobless claims hit a new post-pandemic low. So at least so far, the labor market looks fairly undisturbed and unperturbed by this Delta shock. That could change in the future, but so far, high frequency labor market data looking good. Also, your weekly confidence numbers that come out on Thursday have actually held up pretty well. And that's a critical point because the University of Michigan data that totally fell out of bed in August, I think really scared a lot of people. And the risk with the variant is really twofold. One would be if there are actually explicit directed shutdowns, which doesn't seem to be happening on a large scale. The other risk would be that households, consumers just simply get scared and pull back. And so that's why there was a lot of concern with that number. Yet the weekly confidence data over the last 4 weeks has increased each week and is almost back at a, essentially is matching a post-pandemic high. So if that continues, I think we're in pretty good shape. If not, then we'll have to worry more. So that's my right.
Michael Darda, SPX level 4452. Dow 35,219. The markets share the street's gloom, don't they? Why is there a bid to stocks?
3 reasons, Tom. We have high equity prices. Earnings are very high and have been doing very well. Record S&P 500 earnings and expectations are high. Still low discount rates, so the 10-year yield is moving up a little bit, but very low, lower than most people thought at the beginning of the year, and high liquidity. So you have to disturb one of those 3 supports for equity prices: high liquidity, high earnings, low discount rates. Our view with the strong recovery is that discount rates should be moving up over time, and that will be a headwind to PE ratios if it plays out. It's not really playing out. We've had a little bit of a movement northward. Real rates do seem like they're starting to move up now, so they're up about 20 basis points since early August. That will be something to keep an eye on, as we move into Jackson Hole this week and potentially hear more plans about potential tapering from the Fed.
Mike, we talk about Jackson Hole, but we really ought to call it a Zoom event. I don't know, a Zoom fab. It's just really kind of an interesting shift to all remote for a second year. What is a bigger risk to markets coming out of the Jackson Hole remote confab? Is it the potential for a more hawkish Fed Chair Powell, someone who actually makes news, or perhaps somebody who holds the stance and raises the specter of higher than expected inflation down the line should the Delta variant prove to be a passing viral strain?
Yeah, I think, Powell is going to try not to make big waves on Friday. All of that said, it's pretty clear now, based on recent speeches and the recent Fed minutes, that the center of intellectual gravity on the Fed is definitely moving towards announcing a taper this year and probably commencing the taper before year end, provided the labor market holds up. So this is all going to be data dependent. The Fed's operating assumption at this point is that the Delta variant is not going to dramatically throw the recovery off course. If that proves to be false, then they're going to end up waiting longer. But as I mentioned before, with those high frequency indicators suggesting that we're still in pretty good shape, I think what Powell will hint at is what we already know, that that a taper will be announced likely this fall, and by the winter the Fed will be pulling the trigger on it.
What high frequency data points are you paying the most attention to, Mike?
Well, aside from claims and confidence that come out weekly, I'm really watching the anatomy of this bond market. So as yields move up and down, we're watching what is driving that. Is it real rates or inflation expectations? You also have the estimated term premium in there. And against that foliage, what's happening in metals market and in markets and in risky credit, right? So what we need to be on the lookout for is if real rates start to spike and you have inflation expectations crashing, credit spreads blowing out, that would not be what we want to see. So far, that's not really playing out. We've got a modest correction in commodities taking shape. Credit spreads have widened some, but so far, there really doesn't look like there's anything malignant taking place in credit markets.
Mike, is this a market that is already positioned for the taper and therefore we will get no tantrum?
Yeah, I think that's a good point. What's happening in the bond market doesn't look anything like 2013 so far. So in that episode, we had a really big surge in real rates. Inflation expectations fell pretty considerably, and at least temporarily, we had some serious upward pressure on credit risk spreads, a big commodity fall off as well. And then, in the run up to the 2015 rate hike, even more severe much more severe on the commodity side. So this is not playing out in the same way, at least so far, and it's been very, very well telegraphed. And so maybe the focus on a potential taper tantrum means that it just simply doesn't play out in the 2013 fashion this time.
So if it's well telegraphed, it maybe doesn't present that large of a downside risk. So what could be the potential biggest downside catalyst for this market?
I do think that the downside catalyst for the market would probably be on the valuation side. I don't think we're going to see a big liquidity shock, and I think earnings are going to be okay as long as the economy stays relatively strong. But in a strong economy scenario where the Fed tightens, you still could have, upward pressure on rates. It might not come as a sudden shock, but, over time, I think, the 10-year yield is likely going to be gravitating northward. And, and that should put downward pressure on stock market multiples. Earnings could make up for some of that, but, we're sort of overdue here with the broad indices for, some kind of hold or at least consolidation period.
Michael, let's go back to University of Wisconsin Microeconomics 101. Let's look at the supply curve dynamics. We have a supply shock folded into a labor market right now. All sorts of theories here, shifts, this, that, the other thing. Do you believe that there's a suppleness to the American economy where we will adapt and adjust and get back to normal supply dynamics?
I think we are adjusting, Tom. It doesn't happen overnight, but the labor market is on the rebound now. Obviously, we still do have these supply side dislocations that are a headwind. We can certainly see that. Anyone that's been out there and dealing with the services industries knows that the labor shortage problems are still there. Service is slow, and it's difficult to hold on to employees' help wanted signs all over the place. And the Delta variant certainly does not help that. But we're going to get through the Delta variant, and the economy is going to stay relatively open. As school starts up, that should ease some of these concerns about child care, the extended jobless benefits. I know there's a debate about the impact, but those are, going to wrap up this fall. And that means the labor market is going to continue to be on the upswing here, both in terms of job gains and labor force increases.
What's your 12-month GDP call? I mean, we've got people coming down 6.5%, maybe even some gloomier. The Fed obviously much more cautious. What is your call on GDP 12 months forward?
Yeah, our call is solidly above trend for next year. So keep in mind that trend growth, if the U.S. is fully employed, is only going to be about 2% real, 4% nominal.
Yeah.
So we're going to be at least a few hundred basis points above that straight through next year, and maybe even beyond, depending on the timing, the magnitude of Fed tightening. So above trend growth means the labor market continues to tighten, and it likely means some upward pressure on long-term interest rates, at least from where we are now. So that's the call without giving you a specific point forecast. Solidly above trend.
Michael Darda, stay dry. Michael Darda caught in the rain this weekend, really right in the heart. Is it Henry or Henri, Lisa?
It's Henri.
Henri.
That's you. And how
Michel
do you say
Darda.
Yeah,
C'est bon.
Henri. You can't read it with that. Yeah.
Okay.
Henri.
Henri. In the morning, Liz Ann Saunders is very smart on Twitter, almost as smart as Lisa Abramowicz on Twitter. And Lisa, you had out some jobless benefit stuff this morning on Twitter. Discuss.
Well, there was a story in the New York Times over the weekend that really highlighted this University of Massachusetts study showing that cutting enhanced unemployment benefits early did not necessarily lead to any material uptick in employment, and actually just led to people cutting back spending significantly to compensate for lower income. And really this raises a question, and it goes straight to what Mike Darda was talking about earlier. In September, we're going to see these roll off. Then what? Are we going to see people get back into the labor market, or are we going to see a decline in consumer spending, or both? It matters a lot.
It matters a lot, and my answer is everybody's on the same correct page, which is some form of glide path back to normal, which is like 2, 3, 4% GDP. I don't know. Futures up 15. Dow futures up 154. Stay with us. This is Bloomberg.
With the First World News, I'm Rishka Gupta. The US and its allies have now flown more than 30,000 people out of Afghanistan. Boris Johnson believes the Americans may need to stay past their original departure date. Bloomberg's learned the British Prime Minister will push President Biden to extend the deadline past August the 31st so the evacuations can continue. The president has already suggested that might be necessary. Vice President Kamala Harris is in Singapore, where she announced a new supply chain initiative. She and Prime Minister Lee Hsien-loong also announced agreements on cybersecurity and climate. The two countries want to deepen their economic ties, but the talks today did not cover new trade agreements. And it's been just over a month, and China has once again brought the number of local cases of the coronavirus down to zero. Officials use the same playbook they've used in the past. There was repeated mass testing of entire cities. Meanwhile, quarantines played a huge role. At one point, Beijing was sealed off from other cities with only a single case. In Germany, Chancellor Angela Merkel is threatening to push for more sanctions against Russia if the Kremlin tries to use that new Nord Stream 2 gas pipeline as a weapon. Russia's President Vladimir Putin has raised the stakes in mounting tension over energy. He imposed conditions on any extension of a gas transit agreement with Ukraine, which is an economic lifeline for the former Soviet Republic. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
To stay ahead of this virus, we're recommending that people start to get boosters the week of September 20th. It will start with people on their 8-month anniversary following their second shot. Safety is absolutely essential in this process, and we would not execute a plan if the FDA did not weigh in and say that that third shot was in fact safe. So the plan is contingent on that.
He was born in England via Newfoundland, ended up in Miami, where he had superb academics, Harvard and Yale. Another example of an immigrant done good. Vivek Murthy is the Vice Admiral and Surgeon General of the United States of America. Right now, she's not a Vice Admiral, but we'll talk with Sabra Klein, microbiologist at Johns Hopkins and, of course, with the Bloomberg School of Public Health. Sabra, we're thrilled to have you on today, and I need to go to your wheelhouse, which is the differences in all these things, these bacteria and these viruses between male and female. You are world acclaimed on that. Does COVID treat women different than men?
It does. So women tend to be less likely to be hospitalized and to die from COVID-19, at least among unvaccinated individuals. We also have growing bodies of literature showing us that women are mounting greater immune responses and may have more durable immunity to the COVID-19 vaccines than men.
How has Delta variant changed things? I mean, for everything we do in economics, finance, and investment, it's this huge overlay. But over the weekend, how did you settle out where the Delta variant is right now?
I think where the Delta variant right now, it is spreading. And I am probably most concerned about pregnant women and children. So if we start with pregnant women, there is definitely some vaccine hesitancy being reported around the country. Among women who are either trying to get pregnant or who are pregnant. And I think the CDC has come out quite clearly that all available data suggests that pregnant women are at increased risk of miscarriage and preterm birth if they become infected with COVID-19. There is absolutely no indication that the COVID-19 vaccines, any of the platforms that are being approved or already are approved by the FDA in the United States, that these vaccines pose any safety risk for a pregnant woman or her developing fetus.
In the meantime, of course, we do have questions around the efficacy of the vaccines, not in preventing hospitalizations, but preventing infection from the Delta variant and transmission. Everything I read is so confusing. What's the latest on the likelihood of contracting the variant if you've been fully vaccinated?
So the likelihood is still low, but there is an increased likelihood that we could become infected, meaning people who are fully vaccinated can become infected with this Delta variant. It is more infectious, it's more readily transmissible, but the evidence so far suggests that we are still significantly less likely to be hospitalized or to die, and that includes people who are immunocompromised or immunosenesced based on age.
But Dr. Klein, and forgive me for interrupting, there is a question, though, from a public health standpoint, that even if you are not going to the hospital, you are a node of transmission, even as a vaccinated individual, if you contract the virus. And so there is a question about booster shots. How much, from a public health perspective, do they lower the curve? Do they basically bring down the circulating viral load in the community and get us out of this pandemic faster?
I think it's going to be a combination. I think it's going to be a combination of the booster, but also interventions like mask wearing, like social distancing, so we really can bring that number down to zero, as you suggest. I think we are asking vaccines to do something that we have never asked them to do before. You know, there is a distinction between vaccines preventing disease and protecting us from being hospitalized and dying versus protecting us from becoming infected. And this new level of scrutiny and need for reducing infection is really, I think, what's driving a lot of the discussion around boosters, which in the United States will begin more broadly in September.
Of course, the conversation around boosters really started because it seems, at least there are suggestions that you have waning immunity 8 months out after you get your shot. But we have to consider the people who got their shots first, people who already were immunocompromised, the older population. Could that be a factor in why the effect seems to be waning?
Such a fantastic observation. Yes, that really could be. Our data thus far suggests that among younger, healthy adults, while there is some waning, it's not to the degree that we see in either older adults or immunocompromised individuals.
I just want to say, Kaylee, that the reason that was a fantastic question is she's playing a Southern card. She's out of the Georgia schools, you're out of the Virginia schools, and she's treating me and Lisa like garbage. Continue.
That was not my intention, Tom.
Wow.
Yeah, but you had a fantastic question. Lisa and I didn't have a fantastic question. Speak to the doctor from Georgia right now, please.
All right, to the doctor from Georgia, Dr. Sabra Klein. My other question is, if you have already had COVID-19, if you tested positive, does it matter, or do the variants mean that you can continue to get it again and again and again?
So it does appear that this Delta variant, we can get this Delta variant even if we had been infected with that initial SARS-CoV-2 that started this pandemic. So again, I think even if you've been infected, there is some evidence that immunity does wane. And much of that will depend on when you became infected. But I do think boosters are going to be recommended regardless of whether you had been infected previously.
Dr. Klein, don't be a stranger. Thank you so much for joining us today.
Thank you.
Sabra Klein, who got an A+ on the Krebs cycle, unlike some of us with Johns Hopkins
Really? You
this
have to
morning.
reveal that about me?
Go
on.
No, I took the exam for the Krebs cycle, and Lisa, I went down in flames.
And you went into finance instead?
No, I went into hockey. That's a different story.
Okay, great. We'll discuss it. We've got plenty of
That
time.
was really, really smart. I just love this thing. We've had these people from all over the world, Imperial College and University of Washington, microbiology, and the people out at Johns Hopkins. Lisa, I think it's just been hugely valuable, even if only Kaylee asks the best questions.
Yeah, well, Kaylee, of course, is very
Farrell
well
wouldn't
read
have
in
asked
all
that
of this
question.
because she's about to have a big gathering,
Yeah.
which is why she's leaving us after tomorrow.
That's why she's worried about the Delta variant.
Yes,
She's
exactly.
Paying a lot of
It may
attention.
be. Is it possible, Lisa, that it could be virtual?
No, I don't think so. Kaylee, are you going to
Yeah.
announce a
A
virtual
virtual-
wedding? I don't think so.
think so.
Well, but do you find that people are canceling?
as a
We've
result?
We've had a few. I mean, people who are immunocompromised don't want to be in a room with a bunch of other people. And I do get that. It's to the point that Dr. Saber-Klein was just making. You are getting these breakthrough infections. There are indications that there is waning immunity if you were one of the people that got their vaccine early. And until we have boosters, those people may be just a little bit more uncomfortable going out into the world and interacting with a bunch of people.
Dead on, and there's been a shift this weekend towards that concern. We'll have much more on that from Washington, and I'm sure from Atlanta CDC as well. Please stay with us through the morning. David Leibowitz coming up with JP Morgan Asset Management. Futures up 14. This is Bloomberg.
The economy will continue to not boom, but be really quite expansive, quite strong.
It's all about that transition to higher quality growth.
I think we've got a reflationary backdrop still in place. I think it's reflation for longer.
We've already seen signs inflation is tapering down.
For the last year, it's always been employment, employment, employment.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Bloomberg Surveillance, John Ferro, Lisa Abramowicz, and Tom Keene. Thrilled you're with us this morning. John Ferro off, Kaylee Lines in for John Ferro. With markets lifting and a real shift in the yield space. Lisa, let's go right there. The real yield, negative 1 point gloom, gets to 0.99. This is pretty good, a lesser negative number.
Yeah, I mean, it's a lesser negative number, still deeply negative, raising questions for the Federal Reserve, which is how quickly are they going to allow that to rise at a time when there's so much uncertainty? Are we seeing peak Delta fears, as we saw Alberto Gallo say earlier today, or is this a prolonged slowdown that's going to affect GDP figures, Tom?
It's going to be interesting to see, Lisa. The thing that I see as we set up the weekend is, out of the weekend, I should say, is, of course, what we talked about on Friday. It occurred Friday afternoon. I was waiting for Monday morning. Never got there, but not a canceled Jackson Hole, but a different Jackson Hole.
The idea that it was moved to virtual really highlights the potential economic pain from the dragging on of this pandemic. Because think about all the canceled hotel rooms. Think about all the canceled flights. Think about all the canceled dinners. I mean, this is all revenue for different areas in the nation. And you wonder how long this has prolonged the recovery at a time when offices are basically being pushed out in terms of their closures for that much longer. I mean, what does the new normal look like when we've had this normal for years?
Let's open this up. Kaylee, I want to go to you. Lisa, jump in here as well. Chevron, and this is where we are the end of August. We've all been expecting this. Chevron starts vaccination mandates.
Yeah.
I'm sorry, Kaylee, that's a big deal.
It is. I mean, this is just one in a series of companies who have instituted similar policies, Tom. You have banks like Morgan Stanley now having a vaccination mandate, Citigroup. That's vaccine mandates on one side. You have mask mandates on the other. And really broadly, the return to office being complicated and, to Lisa's point, delayed. If you have people not coming back into the cities, not going into the offices, what does that mean for all the lunch places, for the coffee shops around those offices and those businesses?
That. Okay, that's a Manhattan kind of thing. Lisa, what I like about Chevron is they're the South, they're the West, they're international.
Yeah,
I mean,
good point.
To me, these are companies that are really in the thick of it.
Well, the idea here is of carrots versus sticks. Originally, it was carrots. We'll give you money. You were saying $1,000 per person. You name it. New car, promotions, whatever you want to say.
Red Sox tickets?
Red Sox tickets, although I don't know if you want them at this point.
No,
but then on the flip side, now you either get the vaccination or you don't work here. And you're seeing that much more from corporate America.
Let's do a data check right now to get started. Futures up 16, Dow futures up 153. The VIX 18.64. I expect that to come in under a 70 as well. Let's pause. Bitcoin, we don't show it on the screen. Lucky for you, Bloomberg Radio, you don't get to see it. How much I've missed there. 50,315. Kaylee, did you ever expect we'd see BitDog out above 50,000?
Well, it depends on who you listen to. Some people expect it to go up to 100,000, Tom.
Yeah, like Matt Miller.
Yeah.
There it is. We bring the show to a complete halt with Bitcoin. 50,000 this morning. Brent crude 67 with a lift there. It's really a constructive feel to the market. Again, SPX up 15 points as well. Lisa, what do you have on the wall?
Yeah, it's a buy the dip kind of morning. Today, I'm looking at some of the high frequency data points. I'm looking at 9:45. You get market U.S. manufacturing as well as services PMI data. This follows some weaker data than expected over in Europe. How much are we going to see a weakening weakening as a result of the spreading Delta variant. Then at 10 a.m., we get U.S. July existing home sales. We expect to see a deceleration. Still, though, a very hot U.S. market. How much are we starting to see the sales slow that much more because prices are high and people are starting to get uncertain about how much higher they can potentially go at a time when rates are expected to rise, and that includes mortgage rates. And then today, vacation is over early. House of Representatives back to D.C. They're going to be voting later today on the Senate budget resolution. How much can they push forward Biden's $4.1 trillion agenda, given the fact that the Democrats are so bifurcated, are so dispersed in their views in terms of how to proceed economically? And Tom, this is one of the biggest question marks. How much of this stimulus has already been baked into market valuations, and what kind of taxation does that include?
Yeah, Greg Villiers talking about the kick the can down the road. The reluctant, moderate Democrats may go out and delay past Labor Day here on that critical vote seen today or into tomorrow as well. Right now, and this is very important in hindsight, one of the interviews of the week last week was David Stubbs of J.P. Morgan Asset Management, who was absolutely brilliant on the underestimation of technology and productivity. David Leibovitz agrees with J.P. Morgan Asset Management, their global market strategist. David, I've been through the two of you, the two Davids, David Stubbs and David Leibovitz. I think it is an exceptionally intelligent statement of optimism into the future. Why should we be optimistic given our productivity and technology dynamics?
So, I think one of the things that we keep coming back to when we think about portfolio construction is that there's a lot of excitement around value. There's a lot of excitement around this idea that growth can remain above trend for the foreseeable future. And we hear a lot of clients saying to us, well, maybe we're embarking on this period of sustained outperformance by the more cyclical parts of the economy. And, I think that's an appropriate view to hold in the short to medium term. I think longer term, this is still a world of twos. It's 2% growth, it's probably 2% inflation, and it's very low rates. And in that type of world, technology plays a larger role. And so it's this idea of owning growth and renting value from a portfolio perspective, because we do believe that the economic gains over the course of the longer term are going to be driven by things like technology. And as a result, those types of allocations deserve really kind of a standing allocation within the context of a diversified portfolio.
Okay, so from a 30,000-foot view to a 20,000-foot view, how much does the Jackson Hole confab, which is now virtual, matter to any of these kinds of longer-term calls?
So, I think that the Jackson Hole going virtual is really interesting. I wonder if the Fed is almost sending somewhat of an indirect signal by making that transition. And, I think that longer term, it's important to recognize that, the economy is really no different than it was, say, a couple of years ago. Yes, we've gotten better at doing things from home. Yes, we've gotten better at relying on technology. But in general, again, this is still an economy which is constrained on the supply side. I mean, labor supply continues to look very disappointing. And I would argue that that's been exacerbated by the pandemic. That puts the onus back on productivity. And so what I think we really need to listen to at Jackson Hole and over the course of the next couple of Fed meetings is what's the outlook for labor force participation? I mean, that is the big issue right now. There is no problem when it comes to the demand for labor. There is a tremendous problem when it comes to generating an appropriate supply. And so parsing any statements from Powell or other Fed governors to get a sense of their long-term views on employment, I think is arguably the most important thing to focus on in the current environment.
And couldn't the Delta variant, in theory, throw a giant wrench into that labor market recovery? I mean, we heard the U.S. Labor Secretary Marty Walsh talking about that in an interview with Bloomberg, just the idea that because of all the uncertainty out there, people may be more reluctant to return to work. Do you buy into that idea?
I think that I do. I think that to an extent here, we've spent the past 18 months or so locked down indoors, being very cautious, washing our hands, wearing our masks, and re-engaging with society, if you will, is going to be challenging for some individuals. And actually, what's really interesting is there was some very good research done out of UC Davis and the San Francisco Fed, where they actually looked at the way that the consumer behaves coming out of pandemics specifically. And what they found was that consumers were a little bit more gun gun shy. They tended to save rather than run out and splurge and spend. And so I do think a bit of cautious optimism is appropriate here. I do think that we are in the process of moving past this pandemic, and we are very constructive on the outlook for 2022. But I think the most important thing for investors is recognizing that this big surge, effectively a symmetric response to the downturn that we saw in the second quarter of last year, isn't necessarily going to materialize, and certainly feels like a stretch. That doesn't mean growth can't remain above trend, but it doesn't mean that it really rocks and rolls the way a lot of people were expecting.
So are you basically saying that we could remain in this Goldilocks scenario for a longer period of time, this idea that we could see yields remain where they are regardless of what the Fed does almost in terms of their prognostications, and that stocks can continue to hold their value?
I do. I think that the outlook for corporate profits is very solid. Even with a tax increase next year, we're still at more than $200 a share on the S&P 500 from an earnings perspective. And again, it's interesting when you think about the Fed dynamic. The past couple of weeks, everybody's been talking about tapering and normalization, and maybe it's going to come sooner than expected. And then, you kind of get the jab from the other side that you're not expecting with the Fed going virtual for Jackson Hole. And so, this is a Fed that's going to take its time. It's going to measure twice and cut once. I think bond markets have recognized that. And with a solid corporate earnings backdrop, I do think that equities can continue to move higher.
David, thank you so much. David Leibowitz for the brief there from J.P. Morgan Asset Management, their global market strategist this morning. I look, Lisa, at all of this literally the cacophony of this August on equity markets, and there's people measuring earnings, and then there's people looking at the macro, and they're in two different planets.
Well, you can be pessimistic about the economic outlook, or at least less rosy, and still be positive on the equity market.
Yeah.
And arguably, you could be more positive on equities if you have perhaps a more tempered view of the economy, because frankly, people say the biggest risk to equity markets right now is higher inflation, is perhaps a more hawkish Fed. And that is not the case if you get this sort of slower growth backdrop.
But Kayleigh, what's so important here is in Chairman Powell's speech this Friday, you wonder if he's going to define which inflation he's watching.
Yeah, well, we know the Fed is watching inflation, Tom, but they're also watching the labor market really, really closely. And I wonder if that is what the Fed is prioritizing. Does the Delta variant then become more concerning? And I really just am focused not just on this Friday, but the following Friday, and what the August jobs report is going to look like, because they want to see several consecutive months of strong jobs reports. August would make it several or multiple. How do we define that?
It's going to be interesting to see. Look for Kayleigh Lyons with complete coverage of the jobs report on September 3rd. We're looking forward to that. Futures up 16, Dow futures up 155. Stay with us. This is Bloomberg.
With the first Fed news, I'm Rishka Gupta. Bloomberg's learned that British Prime Minister Boris Johnson will push President Biden to delay the departure of U.S. troops from Afghanistan. That's to allow for more and safer evacuations. The president has already said he might have to extend the deadline for U.S. troops leaving past the original August 31st date. The U.S. and its partners have now flown out more than 30,000 people from Kabul since August the 14th. U.S. Labor Secretary Marty Walsh had high hopes for September, but the Delta's variant's aggressive path has shaken his expectations for a rapidly recovering labor market. In an exclusive interview with Bloomberg, Walsh said he's concerned about the resurgence of the coronavirus dragging on the workforce and economic growth. In Tennessee, at least 22 people were killed and dozens are still missing after record rain sent floodwaters surging through rural areas. Up to 17 inches of rain fell during a 24-hour period about 16 miles west of Nashville. Rescue crews are searching destroyed homes for survivors. And Bitcoin has gone over that $50,000 for the first time since mid-May. The world's largest digital coin is now up 72% since a July low. The total crypto market has seen its value rise almost $1 trillion in the last month alone. And Pfizer has agreed to buy shares of Trillium Therapeutics it doesn't already own in a deal valued at almost $2.3 billion. That represents a 24% premium. The deal will help Pfizer strengthen its leadership in oncology. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
The threat is real, it is acute, it is persistent, and it is something that we are focused on with every tool in our arsenal. Our commanders on the ground have a wide variety of capabilities that they are using to defend the airfield against a potential terrorist attack. We are working hard with our intelligence community to try to isolate and determine where an attack might come from.
Jake Sullivan, U.S. National Security Advisor with CNN, their State of the Union show. Jake Sullivan, of really pristine academics, mostly out of Yale University, and those academics being put to test now with crisis in Afghanistan. Lisa Abramowicz, a set of headlines, which we're going to discuss with Michael McKee here in half an hour, but they have been widely anticipated. The toolkit of China involves their unique monetary policy.
A lot of people have been expecting China to actually cut rates further because, first of all, they rarely cut rates once, and they did lower a key benchmark rate. But also, their economy is slowing down. And here the headlines are that they're calling for efforts. The PBOC, the People's Bank of China, is calling for efforts to push down real lending rates, pledging support to the economy with appropriate money growth, and vowing to keep stable the growth of credit. We had seen the credit impulse actually shrink in China at a time of slowing growth, and at a time when we get a lot of commentary from Xi Jinping as well as others about trying to make it a more equal prosperity within this country as it shifts into a new regime.
Early there Friday, renminbi out to 6.50, and we've come in two big figures to 6.48. Stronger renminbi off that set of headlines. We'll dive into that with Michael McKee here in a bit. Right now, Emily Wilkins with us, the Bloomberg government in Washington. What does the president do this morning, Emily? He's had a challenging weekend, to say the least. What's the Biden agenda this morning?
So two big things for President Biden this week. Number one, just continuing to handle that situation in Afghanistan to try and get U.S. citizens through the airport onto airplanes, as well as those Afghan citizens who have visas, who have clearance to go to the U.S., but are really struggling to get in through that airport.
Okay, does he have an identified czar yet? I haven't really seen the Afghan czar for the president. Is it out there?
I mean, at this point, appointing a czar might cut into the precious time that they need to simply move. They're looking at an August 31st deadline. And while we are hearing President Biden say that he could extend that deadline, while he's been under pressure to extend that deadline from individuals like Boris Johnson in the UK, as well as others in his own party, it could be very difficult to do. We are seeing reporting saying that the Taliban might up their aggression after August 31st, after that set deadline. And so the pressure is really on for the U.S. to make sure that they're getting people through the airport, onto planes, and out of the country.
How much, Emily, is this the topic of discussion this week when the House of Representatives comes back to Washington, D.C.?
I think that that's a really great question, Lisa. I mean, definitely we're going to be seeing more attention in D.C. this week paid on the whole process of moving that budget resolution. There's a tough vote coming up in the House because Democrats aren't yet united on it. I mean, if the vote takes place today, it looks like it's going to fail because these 9 moderate Democrats are still planning to vote no. But at the same point, the vote's not today. They've got to vote on a process, a rule today, and then they'll have the vote later in the week. So there's still some time to negotiate. But look, this Afghanistan issue, it's not going away. There's going to be a classified briefing this week. There's going to be more hearings coming on this issue. I think you're going to see a lot of lawmakers continue to focus and ask for answers on Afghanistan at the same point while they push to move through the budget resolution, the budget reconciliation, and the infrastructure bill.
So, Emily, we've been talking about how Congress members were brought back early from their vacation. Our hearts go out to them. This is a small violin that we're playing right now. What did they hear from their constituents when they went home with respect to the Biden agenda with the $4.1 trillion fiscal support that he was planning to roll out?
You have heard a couple lawmakers saying that they are hearing from their constituents on Afghanistan, but a lot of them who we have talked to and who've spoken up have said that a lot of their constituents, they're more focused on this infrastructure bill as well as different aspects of the budget reconciliation package, childcare, elder care, and expansion of Medicare. That's what a lot of Americans are looking at right now. I mean, let's be honest, if you've looked at the polling over a number of years about what Americans care about, what their top issues are, the domestic stuff continually wins over the international stuff. As gut-wrenching and heartbreaking as the images coming out of Kabul are, there's Americans still realize that the things that are going to really impact them on a day-to-day basis, that's what's coming out of Congress right now.
So what does it mean as these two situations unfold separately, a crisis in Afghanistan and potential steps forward on long-term economic spending? Where does that leave Biden in terms of political capital?
You know, I think President Biden, he sort of got this difficult line to walk here because of the administration's response to Afghanistan and the immense amount of criticism that they're under. At the same point, even though the infrastructure plan, it's pitched as something that President Biden wants, it's President Biden's plan, this is something all Democrats really want to some extent. Yeah, they might differ over the price of this entire package, but they do want it to pass, or at least elements of it to pass. And so I think you are going to see congressional Democrats continue that momentum on the budget reconciliation package and on the infrastructure package, even as a number of them have come out and criticized the Biden administration for their withdrawal in Afghanistan.
Hey, Emily, what do these moderates do on infrastructure? How can they support the liberals?
So, I mean, the standoff here is basically over when the infrastructure bill package passes. I mean, if you're a moderate, the infrastructure bill is this really clear win for you. It's bipartisan. It's something that people like. It's something that's going to impact your district. The reconciliation bill, while parts of it are a clear win, you're already seeing Republicans attack Democrats on this. You're seeing millions of dollars being spent on TV and digital ads from Republican and conservative groups coming after Democrats saying, look how much they're spending, isn't this awful? And so what these moderate Democrats, what some of them have told me that they want to do is just have infrastructure pass, message on that, say, look what we did, look what we are bringing home to our districts, and then let's deal with the more murky reconciliation, which Democrats, there are things in the package they certainly like, but we're already seeing them being attacked on it by Republicans. So it's a little trickier when it comes to communicating that message to voters back home.
Emily, thanks so much. Greatly appreciate it. Emily Wilkins with Bloomberg Government in Washington. And we'll have full coverage on this, particularly balance of power coming up later, the 12 noonish hour. Lisa, I look at where the markets are, and we've seen a substantial drawdown.
Oh, yeah, huge. 6/10 of a percentage point last week. It was really dramatic in this S&P.
It's dramatic.
We did, in fairness, tongue taken out of cheek, there was a huge sell-off in some of the energy stocks, and you're seeing those bounce back more today. But you saw the biggest sell-off in oil and related equities going back to 2018. So there were pockets, but overall, man.
Yeah. I got a copy of the Galley of Ferro on drawdown meditation. I'm just really looking forward to. It's not a finished copy. It's just the first chapter in the introduction as well. Kaylee, what within the data screen on the Bloomberg terminal gets your attention?
Well, to Lisa's point, I'm looking at oil because it was the worst week for oil last week since October 2020. And Goldman Sachs out with an interesting note over the weekend. Jeff Curry and the team saying that sell-off was overdone. They are still looking for $80 on Brent in the fourth quarter. That didn't look all too unrealistic a couple weeks ago, and then that changed next week. So I'm keeping an eye on oil, Tom.
I did not know that. Very interesting. Lisa didn't tell me that.
I'm sorry. It was a good story. I'll send it to you next time.
Okay, thank you. We'll do that. Futures up 14.
Kumbaya.
Dow futures up 133. Stay with us. This is Bloomberg Surveillance. Good morning. Bloomberg Surveillance, a Monday of a Jackson Hole week. Lisa Abramowicz and I not attending Jackson Hole this week. It will be virtual, but I've been told by Mr. McKee we have still a great lineup of people to speak to drive forward that conversation to Chairman Powell's speech in a moment. We'll get to that with Bill Dudley here in a moment. Lisa Abramowicz and Tom Keene, Kaylee Lines in for John Farrell. Romaine Bostic here as well. Futures up 15. Dow futures up 138. A nice correlated lift to the market with higher yields. 1.27%, up 2 basis points. On the 10-year yield, dollar fractional weakness as well. Kaylee Lines notes oil with a lift, and Goldman Sachs verbaling out to $80 a barrel as well. On the granularity of the market, Romaine Bostic. Romaine, good morning.
Hey, good morning, Tom. Of course, we talk about the market, the broader market moving higher here in the pre-market, but some of the individual movers, the most notable ones, they're going down. Keep an eye here on some of those delivery companies, ride-hailing and food delivery companies, DoorDash, Uber, Lyft, all down about 4 to 5% here in the pre-market. You remember back in November, the state of California here in the U.S. passed that ballot measure, Prop 22. It basically exempted a lot of these independent contractors from various state labor laws. A judge on Friday said that ballot measure, it violates the state's constitution. A lot of analysts already out basically saying that ultimately Uber and DoorDash and the like will still win this battle, but it will be a protracted legal battle. Uber already saying it plans to appeal. Flip up the board, also going down on Friday was GM. Of course, we talk about that Chevy Bolt recall, an expanded recall of more than 70,000 vehicles. It's going to cost the company about $1 billion. That adds to about $800 million that it spent on another recall back in July.
Romaine, I don't get it then. Mary Barra, when she's talking to David Weston, everything's la, 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 happy, happy, happy. I mean, did I hear you say this is the second recall?
Well, it's actually the third recall. This is the second one that we've been able to pin a number and a cost to. But, I mean, you make a good point here. I mean, she's done a good job of putting a face on this. But remember, a good part of the reason why we see GM shares had rallied so much in the months prior to this was largely because of the cost control measures that Barra had put in place. And now you have 3 recalls, 2 of which are now going to cost you close to $2 billion to resolve. And, of course, just a lot more questions here about some of the other issues about this sort of EV strategy this company has. Of course, the Bolt, that's going to be sort of the legacy vehicle in all this, but definitely raises some questions about some of the things going forward. Just real quickly here, Tom, keep an eye on Pfizer and all of the other vaccine stocks. The FDA expected either today or tomorrow to finally grant full authorization for those COVID vaccines.
That's not a typo, up 190%?
That's not a typo. Radio? That's Trillium. That was another. I was going to skip it for those who are interested. Pfizer buying Trillium. This is a big oncology company, cancer treatment. It is. They are offering $18.50 a share for this company. That's triple what the shares closed at on Friday, Tom. And simple back of the envelope math says if you're buying into this stock today, it should be up 191%.
On Bloomberg Radio, that's a big number. That's all you need to know. Romaine Bostick, thank you so much for the close this afternoon. Always a joy to speak to William Dudley. He's a former president of the New York Federal Reserve, the interesting mandate at the New York Fed, Bloomberg opinion columnist, and doing so much for Bloomberg Economics as a senior advisor. Bill Dudley, a virtual Jackson Hole. You and I have been there. There's the central bankers go out, they wave at the moose at the split rail fence. They're not going to do that this year. How does it change if Jackson Hole is virtual?
Well, it eliminates all the side conversations at the luncheons, on the hikes. So there isn't the kind of back channel kind of communication that you might get otherwise. I mean, there's a number of things that I would love to talk to Fed participants about that have nothing to do with monetary policy. What are they planning to do on payments and cyber cryptocurrencies and digital currencies? What's their attitude about climate change? So there's a lot of things to talk about. And if you don't have those opportunities at lunch and dinner, you can't talk about those things.
From the fractious Fed development, not to make it a history lesson, but the Panic of '07, out to McChesney Martin in the early 1950s, out to now, where is the Fed mandate to consider climate change? How do they do that? How do they affect that?
Well, I think they certainly have a mandate to consider climate change from a financial stability perspective. To the extent that climate change induces worse outcomes on the macroeconomy, economic disasters, to the extent that it affects the value of assets that banks lend against, that does could potentially threaten individual institutions and the financial system. And the Fed has responded to that. They've set up 2 committees, one to address the overall financial stability risk and another to address risk at individual institutions. And they're pushing these individual institutions to develop data and processes to evaluate climate risk and how they make their lending and other business banking decisions. I think that's completely appropriate. On monetary policy, it's a lot more difficult, right? Because monetary policy is really about what's going to happen in the next year or two, not what's going to happen in the next 20 or 30 years. So even if you think climate change is an existential threat to the U.S. and global economy, which I think it is, it's not clear how you would incorporate climate change risk into the near-term monetary policy decisions. And that's where the Fed's getting some criticism from people who say the Fed's not doing enough on climate change. I just think it's difficult to take the monetary policy mandate and say, well, that really expands to the climate change issue.
Bill, it also, though, goes to the question of policy drift. Has the Fed gotten too far from their main goals of trying to control inflation and support the labor market? I mean, when their labor market goals are a lot less defined, perhaps, than they have been in the past, then you have also other goals like climate change and broader other goals and initiatives that feel more like policy. How much is the Fed risking allowing some of their main goals, namely inflation, to get out of control as it focuses on some of these other goals?
I think this is why Chair Powell hasn't gone that far in the climate change direction from a monetary policy perspective compared to, say, like the European Central Bank. He understands that there is a risk of being criticized of going too far. That said, the financial stability part is certainly part of the Fed's mandate, because without financial stability, the Fed can't achieve its goals on inflation and unemployment. So I think that the Fed is taking the right course. They're taking climate change seriously, but they're focusing on it from a financial stability and safety and soundness proposition.
Well, you mentioned some of the criticism that the Fed has gotten for not acting on this in a more aggressive way. A lot of that comes from the progressives who we would like to see someone else at the helm. But we had Janet Yellen reportedly over the weekend telling White House advisors that she supports Powell for a second term. Just how significant is that?
Well, I think Treasury Secretary Yellen's endorsement is important because she knows what is needed to be the chair of the Federal Reserve. And she's very well respected both inside the administration and outside the administration. So I think her endorsement is very, very important. I think also, when you think about it, Chair Powell really is the path of least resistance. He's already shown that he's very capable, and he has support on both sides of the political aisle. If the progressives got their way and they nominated someone that was consistent with what they want, then I think it'd be a lot harder to get that person confirmed, because how many Republican voters would you get?
You know, Tom asked a question earlier today, and given Fed Chair Powell is likely to remain at the helm, what inflation is he looking at most closely? And is it changing in terms of the nature of price increases, where it is occurring, in terms of how they evaluate it at the Fed?
Well, I think they've focused on the notion of, is this transitory or is this going to be more persistent? To have persistent inflation, really two things have to happen. One, you have to run out of labor and have pressure on wages. And that pressure on wages gets into prices. And two, you have to have a rise in inflation expectations. So far, it looks like there's still some slack in the labor market, and inflation expectations, they've risen a little, but really to levels more consistent with what the Fed wants rather than higher than what the Fed wants. So at this point, the Fed's view is that the inflation pressures that we're having are transitory. Probably they're going to be more persistent than one would like for transitory pressures. In other words, the inflation rate will probably stay above the Fed's target of 2% for a while. But they're really focused on what's happening in the labor market and what's happening to inflation expectations. And as long as those things are okay in terms of their inflation signal, then the Federal Reserve will be pretty comfortable with where inflation is right now.
Dr. Dudley, as did Secretary Yellen, can you tell us this morning that you would actively support the renomination, the reappointment of Chairman Powell?
Absolutely. He's done a terrific job. He has the whole FOMC behind him. I think he's articulated what the Fed's policy is in a very clear and consistent way. So I don't see any reason why he wouldn't be reappointed.
Bill Dudley, thank you so much for joining us this morning. Former president of the New York Federal Reserve and senior advisor to Bloomberg Economics. Lisa, quite a statement there from Bill Dudley.
Yeah, basically throwing his support as well behind Fed Chair Powell in order to remain in that seat. I think a lot of particularly former Fed officials feel like, why rock the boat? Why change the person at the top?
This is not a small item.
No, it's not, especially at a time of such uncertainty and such a sense that the Fed really does control the path of the markets. I mean, a lot of people have said that the main challenge to stocks right now is a possible policy error. Well, keeping the things the way they are is going to reduce at least the anxiety around that.
Well, you see the stability of it all. And Kaylee, it really folds into how we get through Q3 and Q4. because we really have pretty much a mystery of what GDP is going to be. At least have a lot of different opinions, I should say.
There's a lot of different mysteries, Tom. What GDP is going to do, what the bond market's going to do, where do treasury yields end up, where does the S&P 500 end up? There seems to be a wide divergence among strategists on Wall Street as to where they think different assets will go, and the Fed is a huge question mark within that. But to that point about Fed Chairman Powell and maybe some continuity if he is indeed appointed to a second term, you also have to consider where Powell stands relative to the other members of the FOMC and just how big that divergence in opinion is between the leader and the members.
Lisa, Bill Dudley talking about climate change with the Fed.
Yeah.
And the article over the weekend, after the rain of New York City, the rain in Greenland, and I had no idea how high the ice sheet was in Greenland. It's 10,000 feet. I mean, in the Rocky Mountains, that's way up.
Yeah, all the stories about Henri also talked about what we saw in terms of smoke over the North Pole for the first time ever, this idea that we are seeing the ramifications of climate change. But really, the Fed, what's the Fed going to do about it? I mean, honestly,
I don't get it.
From a policy, from a monetary policy standpoint.
Yeah, I just, like, okay, what are they going to do about it? But it's nice to hear about it. Futures up 16. Stay with us on radio and television. This is Bloomberg. Good morning.
With the first word news, I'm Ritika Gupta. The US and its allies have now flown more than 30,000 people out of Afghanistan. Boris Johnson believes the Americans may need to stay past their original departure date. Bloomberg's learned the British Prime Minister will push President Biden to extend the deadline past August the 31st so the evacuations can continue. The president has already suggested that might be necessary. Vice President Kamala Harris is in Singapore, where she announced a new supply chain initiative. She and Prime Minister Lee Hsien-loon have also announced agreements on cybersecurity and climate. The two countries want to deepen their economic ties, but the talks today did not cover new trade agreements. Tropical storm Henry soaked the U.S. Northeast with rain after coming ashore in Rhode Island. The storm left a trail of power outages from New Jersey to Massachusetts. About 1,000 flights were cancelled, and Amtrak had to cancel trains between New York and Boston. Israel's Prime Minister Naftali Bennett will try to persuade President Biden against reviving the nuclear deal with Iran. The two leaders meet Thursday in Washington. On Twitter, Bennett said he would present a plan that will curb Iran's nuclear activities and what he called its regional aggression. And Disney says it has taken in $125 million in online revenue from Black Widow. The movie has prompted a lawsuit from its star Scarlett Johansson. She says she's been cheated out of money she is due because Disney released the film both in theaters and online. Johansson said her compensation was heavily dependent on theater ticket sales. Disney says she was paid $20 million and is willing to include online sales in her calculating her bonuses. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We are not totally shut off, but we are playing a safe sort of a strategy that we must keep the COVID at bay before we can sort of talk about full and sort of an entire open sort of a border or economy.
Edward Yeo, Hong Kong Commerce and Economic Development Secretary there. The tumult of a change, forever changed Hong Kong. Right now, two things to accomplish. Michael McKee in a moment here on Jackson Hole, maybe on what we've seen from the China heads this morning. But first, a chart observation. You can't start Monday without one. David Wilson here. What do you have?
Well, Tom, what I'm looking at is what the folks at GMO are paying attention to, and it's specifically share sales by U.S. companies, whether we're talking initial public offerings or subsequent sales, that they have really taken off in the past year or so. Now, you can argue whether that's part of the coronavirus pandemic, companies needing to raise money, but basically the concern is that we're well above where we were at the peak back in 2000. And this is all according to data compiled by the Federal Reserve. There's a bit of a
share sales or bond sales?
Share sales.
Equity.
Right. There's a bit of a lag to it because, the most recent data covers March. So you're talking about 12 months, basically an average over time, total it up. And, you look at where we were in this past March. I mean, $226 billion over a 12-month period, and that was up 56% from the peak in 2000.
Very quickly, GMO has been very cautious over the recent years. Do they still maintain a tentativeness?
Oh, absolutely. I mean, they're concerned about what lies ahead, and valuation is an issue for them. And then the share sales, as they put it, when the ducks are quacking, feed them, seems to be the philosophy at this point, and that's a concern for them.
The futures up 15, 0.3%. The Dow futures up 157. Small cap leads the way, up 21 points today on the Russell, up 1% even. Right now, it is a change discussion with Michael McKee. He knows some years. Don Cohn, the former vice chairman, was the hiker extraordinaire at Jackson Hole, including paintbrush to Cascade, 19.3 miles. Michael McKee, you can't do that virtually, can you?
No, unfortunately, and as you can see behind me, this is not the Grand Tetons, unfortunately. The Kansas City Fed had to cancel the conference because COVID cases in Wyoming are spiking, and Teton County, where the event is located, has issued a code red warning, no meetings. And so they unfortunately had to move it to a virtual platform for the second year.
Mike, a lot of people are saying that this sends a pretty strong signal, especially because we heard from Robert Kaplan of the Dallas Fed last week that he is concerned about the Delta variant and the potential ramifications for the economy. Is it fair to say that it is symbolic that it's going to be held remotely the same way that it was last year?
It is symbolic, and it does suggest that the U.S. faces some problems with the economy. What we don't know, though, is how people are going to react this year. The Delta variant became serious after retail sales came into play, and only towards the end of the month of July. So even when we get personal spending in on Friday, it may not tell us enough about what the consumer is going to do. We do have the sentiment indexes that sort of collapsed going into August. The Fed has to decide whether or not this means they should delay any kind of taper announcement. I suspect a lot will pivot on the jobs report that comes out September 3rd.
Yeah, that's what Kaylee has been rightly talking about all morning. That perhaps is probably more important than what happens this Friday. Meanwhile, just to have a real hard pivot here, I do want to get your sense, Mike, of what's been going on over in China. This is the gracefulest, which is also a word, pivot point I've ever had. But the idea that the PBOC is basically coming out and saying that it wants to create stability in the money supply, which has been shrinking, and give additional support to the economy. And this does have to do with the Delta variant and how much that has slowed the economic recovery in that nation. What do you make of the headlines this morning about the PBOC's pledge to do more?
I think it tells you more about demand than about necessarily how they're going to conduct monetary policy. But remember, the PBOC is really the Chinese Communist Party, and the party is concerned, it appears, about the direction of growth in China. And one reason being, of course, they shut things down when they get cases. And so obviously demand is going to be seriously affected. Now, what do they do about it? They've been very reluctant to cut interest rates. They have cut the reserve ratio, and they might do that again, or they could put more money into the markets through the repo facility that they use. So far, they've just matched demand and not flooded the market. But that seems to be less important than the idea that there is a problem going forward with China, which means a problem for the rest of the world, because if demand is lower there, then we're going to see fewer exports to China from not just the United States, but everywhere else.
Well, but to your point, Mike, China has adapted kind of a COVID zero policy, and it worked. They have reported 0 new local COVID-19 cases, but it took shutting down wide swaths of the country. There isn't the appetite for that really here in the U.S. to go back to those extremely restrictive measures. So when it comes to the real economic impact, is that enough of an excuse for the Fed to say it's not time yet because of the Delta variant?
It could be. The problem is they don't, as I said, have enough data on that at this point because, as you say, they're not going to be shutting down anywhere except for the Fed conference. We're not going to have hard data that really can be attributed to a shift in policy. We're looking at what the psychological impact is going to be on people. Are you going to stay home more? And that's the question that the Fed isn't really going to be able to answer for some months. I suspect what you'll get from Jay Powell on Friday is some version of we are watching this closely and we'll make a decision when we have a better feel for it. That doesn't rule out September, but it also doesn't guarantee anything either.
So what does the jobs report mean after this, Mike McKee? Very quickly here.
Well, again, from the Fed's point of view, less than it is from the market's point of view. The market, it takes it as sort of a signpost. But again, the jobs report comes out, or the survey is taken early in July, and that was before, and early in August. That is before we get the great shutdown, or before anything happens. The Delta changes. Yeah.
Yeah, Michael McKee, thank you so much. Greatly appreciate it. And with really important coverage on Friday. Thrilled that we'll be with him. Lots of discussions with various and sundry governors and presidents, and of course the chairman's speech as well. Lisa, I look at all this and the shutdown of New York and the reopening. I went out Friday night, literally for the first time in 18 months. I have a sheltered monastic life.
Oh, yeah.
And I expected it would be all partitioned and COVID-y.
COVID-y. Was it the gracefulest COVID-y experience?
Packed, crazy.
Oh,
no
yeah.
masks. No, I was stunned.
This is the first time
Absolutely
you've seen
stunned.
this? Yeah.
Yeah,
No,
really, it's the first. I'll be honest, the first time I've seen it.
Yeah, it's COVID over still. And basically, there is a changed attitude in some urban centers, at least this one, in New York City, where a lot of people who I speak to say, look, I am vaccinated. I'm fully vaccinated. If I get sick, I get sick.
Yeah.
But the reality is, we got to move on. And if I'm not going to get hospitalized, if I'm not going to die, then what's the big deal? And I really do wonder when we cross that threshold into treating COVID like any other virus. Tom.
I mean, I priced up. I had a Budweiser, and
yeah, right.
At
Mickey D's.
Beverage and
Bud Light at Mickey D's.
Bud Light. No,
You
it wasn't
buying
at
that? You buying
McDonald's.
what he's
It was,
selling?
we lived it up large. We went out.
Haley, you buying that?
Yeah.
Nah.
No.
Tom's a Stella man.
Not buying
Or a
it.
dry martini.
Well,
There
yes.
you go.
Oh, yes. Nailed that one.
Dry
Haley, you nailed
martini.
that one. That was a
Stirred,
good question.
not shaken.
Futures up 15. Dow futures up 155. You have to stay with us. Good conversation this morning. This is Bloomberg. Good morning.
The economy will continue to not boom, but be really quite expansive, quite strong.
It's all about that transition to higher quality growth.
I think we've got a reflationary backdrop still in place. I think it's reflation for longer.
We've already seen signs inflation is tapering down.
For the last year, it's always been employment, employment, employment.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning. Countdown to a Zoom symposium sounds less good than countdown to Jackson Hole. This is Bloomberg Surveillance on Bloomberg Radio, on Bloomberg Television. I'm Lisa Abramowicz, Tom Keene, Jonathan Ferro off today. Kaylee Lines in, very much in, ahead of her wedding. Tom, I'm looking ahead, and I'm thinking that probably Alberto Gallo has said the quote of the morning so far, that we have gotten peak Delta fear. And if that is the case, perhaps we are in for an upside kind of swing to what has been sort of a pause in the rally. And that, to me, is the tone this morning, Tom.
And for Michael McKee, leading our Jackson Hole coverage, things have changed, Lisa, in the last 3 or 4 days. And I would suggest even on a global basis, yes, there's Afghanistan. We'll do touch on that in this hour. But Lisa, the Delta variant has changed all.
Yeah, well, it has changed us into expecting the pandemic to end perhaps a little bit later than expected. More than that, really, to start looking at Lambda and whatever else might follow. But it really raises a question, Tom, if we put too much stock in the idea that September will bring the better labor market data than we'd expected, and are we going to push it out to October, to November, allowing the Fed to kind of remain pat?
Well, we'll see. I don't know. I think there's so much uncertainty here. I'm really hesitant to commit, and I see that in the research notes. I mean, Kaylee, what do you see in the research notes? I see adjustment in GDP down.
Well, we've seen that certainly at Goldman Sachs, Tom, but you're seeing adjustments to the upside for equity calls. We've seen Goldman Sachs do it. We've seen John Stoltzfus over at Oppenheimer do it, all within the past several weeks, even with Delta variant concerns out there, because take away the growth equation, corporate earnings, that seems to be what it's all about and what continues to drive the equity market higher. And yes, you have the liquidity factor in there as well, but it seems like those are kind of two different stories where the growth picture is not looking as great, but yet the equity bulls are just getting even more bullish.
But I wonder, Kaylee, if this really is all contingent on yields remaining low. If basically
Fair.
This is the story, that basically the economic downgrades
allow equity upgrades because rates don't change. I mean, how much is that a sort of a predicated assumption in a lot of the equity calls?
Yeah, well, I don't think any of us thought we'd still be at a sub 130 10-year at this point with all of the growth we have seen, with the Fed taper on the horizon potentially in the coming months. The bond market, I think, has confounded everyone. And yes, Lisa, to your point, it's just a question of how long yields can stay this low.
Well, framing the bond market, I think, is important here. 127 on 10-year yield, 112 low, and up about a 150 is where we were. We're sort of mid-rangey right now, but certainly higher yields this morning. The 30-year bond, 1.89%. Critically, the real yield is a lesser negative statistic, a negative 1.00. Right now, futures up 14, Dow futures up 147, and the VIX 18.62 with fractional dollar weakness. Lisa, it's a time to recalibrate and sort of BNP Paribas with all that they've done, a more cautious view of the economy. They recalibrate this morning.
They recalibrate and they take a look at rates on a global scale. And frankly, that is the only way that we can look at them based on the fact that you get a lot of international buyers in the U.S. market. And the differential dictates a lot more than perhaps the absolute policy. Shahid Lada looks at all of it. Shahid Lada of BNP Paribas, head of G10 rates strategy for the Americas. And Shahid, how closely are you watching the Zoom confab, the Jackson Hole virtual event on Thursday, on Friday, where we get a sense of what tapering really means to them and how near it is?
Sure. So thank you. Indeed, we're watching it very, very closely. The Fed, I think, has managed another hawkish turn amid a lot of dovish noise. What I mean by that is the central case that comes out of the July FOMC minutes is now the start of taper this year, which presumably would be an announcement in September or November. But at the same time, a lot of dovish cushioning around the Delta virus, the Delta variant. And so there remains a lot of uncertainty. And I think Jackson Hole offers us the best or earliest opportunity for more information. The minutes are nearly a month old by then. So either we'll have some dovish or hawkish sentiment that can bring, even September into a live state regarding taper.
Well, if we get more information come this Friday, if we get an actual announcement of tapering in September, what is then the resulting market reaction? Do we get a tantrum?
So this is somewhere where we've had a strong view for a long time. And no, we don't expect a tantrum. And this is despite the risk of this earlier yet slower taper pace that I think the Fed's put out there. September remains too early for us, and something too substantial remains unlikely for us at Jackson Hole. But of course, as I've said, meetings are now live and it's indeed possible. But we don't expect a tantrum. We expect a tantrumless taper. And the reason for that is threefold. The first is this is well flagged, the different crisis, the economy is in a different place. We've almost reached exit velocity very, very quickly compared to 2000 and the GFC. And the second important point is the deficit will fall next year. So any reduction in Fed buying will almost be offset, if not more than offset, by a shrinkage of Treasury issuance. The final point is the Fed's introduced a bunch of liquidity facilities, which also help to effectively cushion the blow of them leaving the market as the biggest buyers right now.
Shahid, I got to say, I feel sometimes a little misguided when we talk about tapering and we put this emphasis on how that's tightening in policy when they're still buying tens of billions of dollars of bonds every month, adding to a balance sheet that is at a record $8.3 trillion and expected to continue to expand possibly by another trillion over the next 12 months, even with tapering. I mean, given this accommodation, how big of a balance sheet do you expect from the Federal Reserve, and what is that actually doing in the market right now?
Sure. So I think you've hit the nail on the head. Taper is still QE. It's not QT. And therefore, the balance sheet is still expanding. And to that end, we expect the balance sheet above 9 trillion or close to 9 trillion this year. And obviously, 9.5 and potentially higher next year. So what it's doing is keeping financial conditions as accommodative, almost as they've ever been. You highlighted earlier that stocks are close to their all-time highs despite the recent wobble. And I think that's also reflected or as a result of close to the lowest level of real yields and credit spreads we've ever seen.
Yeah. How do you factor supply and the potential reduction thereof later on this fall when thinking about that story, combining it also with Fed tapering?
Sure. It almost helps to offset the story here, offset any risk of the market being concerned. So we've substantiated that taper in itself is not a negative QE or liquidity event in terms of its outright, but in terms of its delta, the size of the pace of increase is obviously moderating with a view to stop, let's say, by the end of Q3 next year at the latest. So to that end, it's really how does the market take this? It's the fear of the Fed leaving the market, which is what we saw in 2013, which is, I guess, what we're all scared about, including the Fed, a tantrum. We don't think we get that this time. We haven't had much whiff of that so far. In markets, we see where real and nominal yields are. And an important part of that is the deficit should fall by nearly a half, from 3 trillion to 1.5 next year. Bond supply will fall materially next year, and therefore it should cushion the blow to less Fed buying.
Well, but Shahid, what I'm hearing from you is interest rates could remain where they are even with Fed tapering, right? I mean, that basically what it seems to be to me is that 10-year yields could remain where they are even if the Fed pulls away from buying bonds.
Look, I think that yields indeed, it's fair to think about yields not reaching as high levels as we perhaps previously thought they would, or in that space of time. Part of that is also related to the debt ceiling, which is now adding more and more liquidity into the market over the summer. This was supposed to be resolved by July with more bill issuance and basically less liquidity in the market. That's not been the case as the Treasury runs down its cash. So in other words, fixed income could stay squeezed further through the summer and keep what yields at what we think are somewhat artificially low levels. We look for a range of about 125 to 150 for the summer, once the debt ceiling is hopefully resolved in the early fall and the Fed announces taper. We think those factors can take us higher, but gradually higher. We think we can get to 170 and above later this year.
Wow.
But it will take some time to play out, we think.
Shahid Lada of BNP Paribas, thank you so much for being with us. Tom, what is the trajectory of a 1.7% 10-year this year? I mean, what would that do to, for example, Apple?
I think the answer's a lot. Lisa, I think this is way underplayed. It's nonlinear. It'll be fine and measured, and at one point it won't be fine. It won't be measured. But I would go, and I'm a disciple of this. It's Stanley Fischer, and it's the percentage move. You take that move of 30, 40 basis points, and you divide it by where we are right now, and it's a huge percentage change move to go from 127 up to 1.70.
And didn't Mr. Wilson really show the correlation of big tech and rates, and just it's basically neck and neck?
Yeah, well, I'll go with big tech on that, and that's discounting their huge growth. But I'm just saying the percentage move in interest rates is something I respect greatly.
Yeah. Meanwhile, we're looking at a market that does have a lift. It is a buy the dip kind of market. A dip evidently counts as a 0.6% drawdown, as we've been saying, of S&P. Coming up later in the hour, we've got Peter Trubowitz of the London School of Economics, an international relations professor. That conversation coming up next. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. Bloomberg's learned that British Prime Minister Boris Johnson will push President Biden to delay the departure of U.S. troops from Afghanistan. That's to allow for more and safer evacuations. The president has already said he might have to extend the deadline for U.S. troops leaving past the original August 31st date. The U.S. and its partners have now flown out more than 30,000 people from Kabul since August the 14th. U.S. Labour Secretary Marty Walsh had high hopes for September, but the Delta variant's aggressive path has shaken his expectations for a rapidly recovering labour market. In an exclusive interview with Bloomberg, Walsh said he's concerned about the resurgence of the coronavirus dragging on the workforce and economic growth. In Tennessee, at least 22 people were killed and dozens are still missing after record rain sent floodwaters surging through rural areas. Up to 17 inches of rain fell during a 24-hour period about 60 miles west of Nashville. Rescue crews are searching destroyed homes for survivors. And Bitcoin has gone over that $50,000 threshold for the first time since mid-May. The world's largest digital coin is now up 72% since a July low. The total crypto market has seen its value rise almost $1 trillion in the last month. And Chevron reportedly is requiring some employees to get vaccinated for the coronavirus. And according to Dow Jones, the second largest U.S. oil company is considering mandates for its entire workforce. COVID outbreaks are said to have affected operations at several big Chevron sites. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The Fed is clearly, at sometime in the next month, 2 months, 3 months, 4 months, going to start the process of tapering. Whenever that happens, that's less money coming into the market, and money will leave the stock market and go into the expanding economic circumstances.
Dennis Gartman with some thoughts there. I believe that was on Friday, of course, with managing money for the University of Akron, their endowment fund, and of course the Gartman letter as well. Lisa Abramowicz and Tom Keene with Kaylee Lyons in for John Ferro this morning. And right now we digress. We look at Bitcoin at 50,000. I'm looking for it on the screen, Lisa. My eyes are glazing over. 15,348, up 4%. Always then a good time to talk to Edward Vanderwalt about Bitcoin. Eddie, if I do a log chart of Bitcoin and I regress it back, it's actually a very elegant chart. It's very trending in a very, very lovely way. And it says $100,000 per coin, spring of 2023. Why won't that happen?
Yeah. Absolutely. I mean, it's a beautiful chart that just shows how parabolic the rise of Bitcoin has been. But past performance, no guarantee of future performance, right? Bitcoin is in a really interesting space at the moment. We are seeing the broader financial markets just getting interested. And this time around, it's different, right? Because last time, 2017, when we had Bitcoin rally, we saw the collapse. It went down 80% and then did nothing for about 2 or 3 years. And really what brought it back was a change on the supply side. But this time the demand side seems to be just a little bit more stable. And Bitcoin demand just hasn't gone away this time around. And I think that's a really interesting change. I think the broader financial community wants to get in here.
The mining of Bitcoin through electricity in China is under siege. Do guys like you, experts like you, just assume that migrates geographically someplace else?
I think it's already started migrating, and a lot of it's coming to the US, to be honest with you. We've seen that. But the hash rate, the rate at which a Bitcoin is mined, the computing power that's dedicated to mining Bitcoin has fallen. And that's definitely true, and it's not recovered to those, to the sort of China high era. But that almost doesn't matter, because algorithmically we're going to create the same amount of Bitcoin no matter what, right? Because that's just the way it is. As long as there are some miners out there, the production rate of Bitcoin remains stable. So this makes it very different from your normal, mining activities.
All right, so Eddie, this is kind of maybe a basic question, but why is it up so much right now?
No, that's a good question.
There's a number of reasons. Look, I think the reason for the turnaround in Bitcoin is always hard to guess. But I think one of the reasons for the turnaround over this weekend is that we saw PayPal saying that they're going to launch a similar service to what they have in the US, where in the UK customers can buy on their platform Bitcoin. And the more access points you give, customers to Bitcoin, I think that that helps bringing new buyers into the market. Yeah. But more importantly, there is talk of a US ETF. We haven't seen one yet, but the US regulators are growing a little bit more welcoming towards a cash-settled, futures-backed ETC. And I think that will be very important for Bitcoin. That could be a game changer.
Eddie, we've been talking about a potential Bitcoin ETF for years now, and it still hasn't come to fruition. It's still very much a question mark. And let's face it, Bitcoin doesn't often trade on that much fundamental. A lot of it is technical. So above the $50,000 level, where do the technicals suggest it could go?
Look, you're right. I mean, you know, Bitcoin trades on excitement. Bitcoin goes up when the animal spirits are behind it and when people are talking about it, when it gets airtime on television, when it gets column inches in the papers. That's when Bitcoin goes up because more people hear about it and that pushes up the price. It's hard to see, you know, anything standing in Bitcoin's way now that it's above 50,000. You know, it's very hard to pick a price, but, you know, tests up at the record highs at 60,000, it's plausible.
There's obviously people that invest in crypto because it's an asset that just has climbed historically, continues to climb to levels that few people, I think, understand. But then there's also people who think this is actually going to eventually replace fiat currencies. And I'm wondering if, I don't know if the digital dollar is going to be a subject of discussion at the virtual Jackson Hole, but if that conversation accelerates, does that kind of make the case for a deteriorating Bitcoin case?
Yeah, I think that's still a very hard case to make, right? I mean, Bitcoin's still nowhere near replacing the dollar. It's not really making inroads in the real payment economy. There are places that you can pay with Bitcoin, but few people choose to do so. But Bitcoin's still purely speculative asset. What's more interesting is what's happening in the Ethereum space and some of the other cryptocurrencies where we're seeing, you know, real innovation happening.
Eddie, let me go back to first principles. The game of this is there'll be 21 million Bitcoins. Right now, there's 18 million plus. I really don't know what the number is, folks. It's Monday. I'm making it up. Eddie, what happens when we get to 21 million Bitcoins mined?
Yeah, it's a long way in the future, Tom. But, you know, I think when we do get there, so what we're seeing in other cryptocurrencies, we're seeing that they move away from algorithmic mining principle, and that at that point it becomes about proof of stake. This is what Ethereum is doing at this point, and this is what the Bitcoin people are saying they are going to do at that point. But we're a long way off because the rate of production slows in Bitcoin. So, you know, we're not talking about this happening in, you know, any time in the foreseeable future.
Eddie, I guess thank you. I think
Really?
Lisa nailed it. Like, why is it going up?
Eddie, thank you.
Vanderwall, thank you so much. Always just brilliant here. You know, he said proof of stake, and I'm like, you know, I looked at dry aged steak at Whole Foods this weekend.
Yeah.
And it was like $4 million a pound.
Well, I mean, literally every time I walk in, I hear your voice saying, whole paycheck. I'm going to whole paycheck. I mean, that definitely is how it feels.
I migrated right to the hamburger. The big decision was 15% or 20% fat.
Oh, yeah? Who won? 20% or 15%?
I can't remember.
It's.
I didn't make that executive decision.
I have a sense of who is lined up on either side of that debate. Look, you know, honestly, when we talk about crypto assets, it was interesting that Eddie was talking about the regulatory impulse and how actually more regulatory guidance would be positive for the crypto asset. But how do you regulate Dogecoin? I mean, I'm telling you this because my kids use that in Roblox. My kids are more knowledgeable about Dogecoin than I will ever be. And if something is created as a joke and has rallied however many million%, what do we make of that, Tom?
Kaylee, are you involved in this? I mean, you know.
I am a passive bystander, an avid passive bystander. I haven't found my entry point, Tom. I know you're still looking for yours.
I mean, can you just see her, you know, the wedding list thing you make up, Scully and all that? Kaylee's got the Doge on there.
Yeah.
Oh yeah.
Yeah, you can give
100%.
her wedding gift. She accepts Doge. She accepts Bitcoin. Yeah, please.
Yep.
You're
Let's
like,
do a data check. Pharaoh would be to a data check by now.
Yeah, she
Let's
would.
do a data
let's
check.
Do a data check.
Say ourselves. Futures up 16. Dow futures up 167. The VIX comes in just as I predicted, a little bit. Teens weens. 18.48. Yields are in 1.26% in the 10-year. That's a low yield for this session of Bloomberg surveillance. We've got currency weaker. Markets actually moving. Euro 117.24. Please stay with us. Kaylee Lines, Lisa Abramowicz, Tom Keene, good morning. Bloomberg Surveillance. Good morning, everyone. Kaylee Lyons in for John Ferro, Lisa Abramowicz, and Tom Keene on a Monday, an eventful week to Jackson Hole. But then there's no Jackson Hole. Diane Swank lined up to be at Jackson Hole, and she, like us, canceling travel plans, etc. All of this with the market lift this morning. Sort of a buoyancy here. We're right up near record highs as well. Diane Swank, we really need to speak of this American economy right now. We've been remiss on that in the last 2 hours. Let me ask you chapter 23 of a beginning textbook at the University of Michigan. Why are stocks up if we have so much worry about our economy?
Well, you can explain the stock market to me about as well as I can explain it to you, Tom, but I think the reality is that the expectation is the Fed will certainly signal a much more dovish tone. As we were going into this, we saw the consensus build on the wind down on asset purchases, but now that looks like it will be delayed. We don't know what's going to happen. We're in the middle of a fourth wave. We hope it will be short, but now that schools are opening without masks in some parts of the country and children are now the fastest growing cases of COVID cases, that matters. Schools opening matters for parents, particularly mothers, particularly low-wage mothers, to get back into work. And if that can't happen, the economy is going to slow. We've already seen a pullback out there by some of the concerns regarding the Delta variant, even among the vaccinated.
Have you observed reduced consumption, or what will you look for in the coming days and weeks to indicate reduced consumption?
Well, we've already seen cancellations of flights go up. One of them was mine, of course, but we've seen cancellations go up and throughput at airports come down fairly quickly. And it's not just the end of the vacation season, which you would expect seasonally. And that's one of the things we watch is those TSA lines and how many people are being checked through them. We're also watching the credit card, high-frequency credit card data, and that looks like people are starting to pull back a bit in congregated areas, like going out and eating indoors. That is something that's harder to do, even if you're vaccinated with the Delta variant out there. And I think these are important things to be watching right now. We hope it doesn't mean as big a pullback because we don't have the fiscal cushion. We're seeing fiscal stimulus wane as we go into this. We really need to get people to the point where we can keep the economy open. And I think the important issue is we also want kids in school safely. And the important issue is to learn how to manage what has now become not just a marathon, a pandemic, but with a mirage of a finish line.
Diane, please, can you elaborate on this idea that the fiscal impulse is starting to fade a little bit? And I'm thinking about September with the end of some of the enhanced unemployment benefits. What potential effect will that have on an economy that a lot of people thought this would be a boon to, because this would actually open more people up to get back into the labor force that badly needed them?
Well, that's a real issue. One of the things we've looked at is a couple different scenarios, and these are only two scenarios. But what we had from all the stimulus out there was not only were we going to see the economy, if we could remain open, fully open, go above and boom and go above its previous trajectory, we were looking at it sort of being able to recoup these losses that we lost in employment much more rapidly. If, in fact, we see the disruptions to demand sort of come in line with the disruptions we're seeing to supply chains globally, you start to see that potential to grow much more lowered, and you can't reach that former trajectory, and it takes much longer to get people back employed, and many more jobs will be permanently displaced. You also have many more people out there who simply can't work as much because of long-haul COVID, hitting a younger cohort of people now. Long-haul COVID does have real economic effects for those people in their ability to work. And that's something that we keep ignoring in this when we talk about labor supply.
Well, with your academic credentials, Diane, I'd love you to weigh in on some of the recent studies that have come out, including of the University of Michigan, that actually talked about the earlier end to the enhanced unemployment benefits and the idea that we actually did not see that much of an effect on the employment, but we did see a reduction in consumer spending. Is there a broader takeaway from this, or was this study so narrow and so specific that it was very hard to basically create some sort of broader assumptions?
Well, there's been a lot of looking out there at what's going on. It's not just University of Michigan. There's been a lot of people looking at this and researching it. And the preliminary results are that the best we can tell, it hasn't, the ending of the supplements to unemployment insurance had a very small impact on people looking more. In fact, the biggest issue is fear, that people are afraid to go back in and look because they are afraid of contagion. And some of these benefits ended in areas where we then saw the Delta wave surge. And so it's really hard to tease out these issues. And as we come to September 6th and we lose millions upon millions of people losing their supplements, but also their entire access to the unemployment benefits that are out there, that could mean much slower spending. We did see pockets of lower mobility wherever COVID cases surged in the South. And I think that's something people forget, is it's not just about lockdowns. Austin Goolsbee did the work on this at the very onset of the crisis, and they've updated it through 3 waves. Every single wave, although we've been more resilient because we had the support of fiscal stimulus, we have seen a pullback in mobility, a pullback in congregating that costs the economy regardless of what states had lockdowns or not.
Well, Diane, we find ourselves at a very different moment in time than I think anyone thought we would be in 1 or 2 months ago because of the Delta variant. Does that give the Fed enough cause for caution and to stay put for longer?
I think it does, and I think it's one of the reasons you're seeing the markets excited, because they've seen so far we've done really well. We've been able, some companies clearly benefit from the idea that we are more cooped up in our homes instead of stepping out to see and be seen. Those issues are things that help many companies that are the biggest beneficiaries and have been the biggest beneficiaries in the larger equity market, but that doesn't spread across, as we've learned too many times during this crisis, is a rising tide does not lift all boats. And what we've seen is inequality widen. And just as we thought we were maybe papering over some of that gap with fiscal stimulus, we're now taking it away. And that's what I worry about, is that the dividends to the fiscal stimulus we put into the system are being fettered away by the fact that we were unable to get to a place of immunity and keep the economy as open as we all want it to be, keeping our kids in school safely. They've got to get back at school. They're losing educational attainment. All of those things have a scar on the complexion of our economy, could have a scar for some time to come.
Yeah, when you say some time to come, how long are we talking? Because these are issues that won't just be immediately solved by getting more people vaccinated. I mean, there's going to be more variants. This is a pandemic that isn't just going to end on instant. How long does it take us back to take us to get back to a semblance of normal in the economy?
Well, the economy can look normal in its overall economic aggregates, but what I worry about are the million students that didn't show up at school at the beginning of school last year, and those students, mostly a third of them kindergartners, being set back in their development and also their educational attainment. That's undermining the core of, they need catch-up education. Now, the good news is this is really perverse, but school districts actually made money off of the pandemic because they didn't pay for facilities, they laid people off, and they got a transfer of government funds to make the schools more safe. All of those things means we should be investing that money in catching those kids up. Now, that doesn't deal with all the millions that also postponed their education during the crisis because they didn't want to do it online. And I think that's important too, because that was training. Even truck drivers didn't get trained during the height of the pandemic, and we wonder why there's a shortage today. There are many things that were supply-side shocks to the labor market as well, in addition to now over 2 million, according to the Kansas City Fed, of people who retired as well, that wouldn't have retired otherwise, that would have come back into the labor force. Until we can ensure safety, we can't pull those people back in.
Diane, we were going to see you at Jackson Hole. Now we will not. It's just simple as that. How will the Powell speech be different?
I think you're going to see Powell doesn't want to scare people, and I don't think you should be scaring people right now, but he wants to reassure. And I think he'll be talking about the resilience of the U.S. economy, how we've made it through these waves. We've been able to do it with fiscal stimulus. We still have some left, and we hope to, he's always said, the one thing that I've always said, change the course of COVID, change the course of the economy. And so he's going to have to temper things a little bit, that we're ready to do what we need to do to support the economy. We're also ready to start thinking about winding down our asset purchases, but his economic outlook, I think, is going to be much more tempered than it was just a few weeks ago.
Dan, thank you so much. Diane Swank with Grant Thornton. And Lisa, that really, for me, in the swirl from Friday through the weekend into Monday morning, not being able to see Diane Swank at Jackson Hole is a miss.
Well, it's a miss, and frankly, it's also a miss for all of the businesses. And you think about all of the cancellations that we're seeing in the economy as people second guess some of their travel. I mean, honestly, the message being sent by making this virtual so soon before the conference is a pretty strong message, Tom, and it's unclear whether Fed Chair Powell is going to really hammer home on that, and it's not a positive one.
I mean, it's very interesting to see, and of course, business formation is everything. Kaylee Lyons, wonderful to see up the Hudson River where Lisa hangs out. Accord, New York, the Accord Market will be opening today for business. Just one example of the entrepreneurial business formation. Everything in the market is gluten-free except the Tang. I called up ahead, and the Accord Market, Accord, New York, is selling Tang, which is a good thing.
Great promo, Tom. But to Lisa's point, and to your point about business formation and forming, I want to go back to what we were just hearing from Diane Swank about. Everyone said September is going to be a defining moment in this labor market. You're going to get kids back in school. That is going to bring working parents or formerly working parents off of the sidelines. And I know this is an issue Lisa probably thinks about every minute of every day. The idea that if you have to go back to entirely virtual schooling because of the Delta variant, like a la Jackson Hole, moving to a virtual forum. What is that going to mean for this labor market recovery and what that report is going to look like?
Lisa, the Accord Market, they play Bonnie Raitt, and then they play Rory Block, and then the band.
Where do you get this stuff?
I got to go out and buy a pair of Birkenstocks.
Yeah,
Can you see me in Birkenstocks?
100%.
With the socks?
With socks. Yeah, with socks. By the way, coming up, we're going to be talking about Jackson Hole with Sandy
Accord
Brager,
Market. Try it out.
Aspiriant
They
managing
Tang.
director. He's talking about, a market and Tang. Look at those markets. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The US and its allies have now flown more than 30,000 people out of Afghanistan. Boris Johnson believes the Americans may need to stay past their original departure date. Bloomberg's learned the British Prime Minister will push President Biden to extend the deadline past August the 31st so the evacuations can continue. The president has already suggested that might be necessary. Vice President Kamala Harris is in Singapore, where she announced a new supply chain initiative. She and Prime Minister Lee Hsien-loong also announced agreements on cybersecurity and climate. The two countries want to deepen their economic ties, but the talks today did not cover new trade agreements. And Tropical Storm Henri soaked the U.S. northeast with rain after coming ashore in Rhode Island. The storm left a trail of power outages from New York to Massachusetts. About 1,000 flights were cancelled, and Amtrak had to cancel trains between New York and Boston. And the maker of a top-selling COVID vaccine, Pfizer, has agreed to buy all the shares of cancer drug maker Trillium that it doesn't already own. The deal's valued at almost $2.3 billion. That represents a 118% premium to Trillium's 60-day weighted average price. I'm Ritika Gupta. This is Bloomberg.
Obviously, you feel, distressed when you see people realizing what they're going to lose as a result of the Taliban coming back into power. But it's not just about the Afghan people, it's about us and our security. Because you've now got this group back in charge of Afghanistan.
It is about us. The former Prime Minister of the United Kingdom, Tony Blair, a really interesting interview. Thank you to the AP for bringing that to us. Made a real impact over the weekend, and it dovetailed with a request I made to our great team Thursday, I think it was. Would somebody get Trubowitz on the line? He's at the London School of Economics, but for years held court at the University of Texas at Austin, thinking every day about government. Usually we talk to Peter Trubowitz maybe about China, this, that, the other thing. And now Professor Trubowitz on how we pick up the pieces from Afghanistan. Peter, wonderful to have you with us. We went from, I guess, a Washington consensus Along the way, there was a clash of civilizations. Zakaria talks about a post-American world. What's the new world look like? Does Biden have a theory to go on?
Tom, great to be with you, as always. Right now, it's kind of hard to see Biden's theory. I mean, we are in the midst of a real debacle and crisis in Afghanistan, and I'm sure we'll talk about it. But I think it was informed, the decision to withdraw from Afghanistan was in fact informed by some larger international or geopolitical as well as domestic considerations. I mean, internationally, I think the larger goal here is to reorient American strategy and statecraft. You know, over the last 20 years, America's strategic interests in East Asia have become far more important to the United States. And the goal was, to reorient a kind of American statecraft in that direction. And withdrawing also made sense domestically. And I say this because the greatest threat to American credibility and influence internationally is domestic divisions and political extremism at home. And the war was not a source of that. But the goal, I think, has been to try to reinvest domestically and to buy some space internationally to do that.
We're going to keep this going. We got a bit of a connection issue, but let's keep it going. Kaylee, another question, please, for the professor.
Well, Professor Truberos, we of course have Vice President Kamala Harris on tour in Asia now, the Afghanistan situation coloring that trip, casting quite a large shadow. And she was speaking in a press conference with the Prime Minister of Singapore earlier today. And he said that we are watching what's happening in Afghanistan, and the influence perceptions of U.S. resolve and commitment will be what the U.S. does going forward. What does the U.S. do next?
Up the trip.
We're going to leave it there. We've got a bad connection with Mr. Trubowitz over in London, and we'll pick that up tomorrow. Kaylee and I can drive this forward. Kaylee, to me, to your wonderful question, to me, the major issue here is the polls that I see on what Americans want. And one thing that's really brought it home in the last couple of days for me is to go back and look at all the frontline work with their leadership, GBH in Boston and PBS and the rest, and just to see the struggle that President Obama had, realizing where the American public was versus where the Washington elites were. And then you stagger on to Trump and you stagger on, now we are to Biden. But to take it back, a good 10 years really was quite something.
Well, and it comes back to Peter's point about what the domestic considerations here and what the American people wanted. There was support for ending the war in Afghanistan, for getting troops out of there. I think there is a little bit more nuance in terms of how exactly the withdrawal was handled. That doesn't seem to have, the Biden administration doesn't seem to have popular support on that front. But then I was speaking to the editor-in-chief of Gallup last week, Tom, about what the American people's perception of this is. And he said, frankly, this isn't something that people vote on in the midterms. They are much more interested in the economic situation at home, things that affect them domestically. Foreign policy really isn't high on the agenda. So in terms of how it translates into the midterms and beyond, Tom, that I think is still a major question.
I agree with that. But, I look at NBC Meet the Press, and in the panel, they show the reduced ratings for this president just over the last summer months. Part of it's COVID, part of it's Afghanistan. And I wonder if this time is different. What I would say, Kaylee, is we go to 5 p.m. hour in Kabul, and we get through another day as well. It is about the airport and also about, as Anne-Marie Horton said, some real unrest to the north and what the Taliban are going to do up a good 100 miles up to the north.
Yeah, and of course, Tom, this isn't just about the Taliban versus the United States. There are other allies involved in this fight. We know the UK, other NATO allies have people on the ground in Kabul as well. This isn't just American troops. And we have the G7 convening tomorrow. Boris Johnson has called that meeting to address this issue. And to me, Tom, this raises a question of it's not just about the U.S. versus an adversary, in this case, the Taliban, and it's how this has changed the relationship between the U.S. and its allies, its friends, and what those relationships are going to look like going forward, given how this crisis has unfolded.
We'll continue to monitor this through the morning, and of course, news out of Washington as well. The markets this morning are really quite good, and what's different is the correlation is in place with equities higher, yields higher as well. That's a lower price, higher yield, 1.27% in the 10-year yield. It is a constructive way to start the week, and I would suggest, Kaylee, the endurance of it this morning is off the Chinese headlines of an accommodative PBOC.
And even before those headline crossed, Tom, you did see that really strong rebound taking shape in Asia, much stronger than what we're seeing taking place in the futures market or what we're seeing in the European session. You had Chinese tech stocks, for example, up more than 2%. None of the fears around Chinese growth or on regulation have gone away. It seems that there was just some buying of the dip, and it seems that dip buying is a lot stronger in Asia than it is here in the U.S. or Europe. But of course, the U.S. and Europe got hit a lot less hard last week.
Decidedly different than what we saw last week. And of course, as Kaylee mentioned, folks, earlier, the partition of the market last week among a fair number of losers and then a few winners. And Kaylee, then there's the Doge and Ethereum.
and the BitDog.
I must admit, I didn't look, the first thing I did not look at this morning was Bitcoin, but $50,000.
Yeah, for the first time since May. It's up about 70% from its low last month, Tom. I mean, this has been a really, really remarkable rally, and the question is how persistent can it be? With Bitcoin, we look often at the technicals, and there are a lot of technical watchers saying it's above 50. It can go to record highs next, so we'll have to keep watching Bitcoin in the days to come.
Why have I missed this, Kaylee? What is a generational thing where I've missed Bitcoin and, you loaded the boat on it 2 years ago? I mean,
I didn't, though. Ask Matt Miller. Matt Miller loaded the boat on it like 10 years ago and then forgot his password.
Yeah, lucky him. I wish I could use that excuse. 50,318 on Bitcoin. Let me go through the equity markets, up 16. Standard & Poor's 4452 on Standard & Poor's. The Dow, 174 points, 35,231. Looking at a VIX, it's better. It's come in a little bit, 18.40. That will be interesting to see. Balance of power on COVID, Mark McLennan. This is Bloomberg. Good morning.